finance training. Fall finance training, it certainly feels like it's more winter time, but we appreciate all of you joining us here now. We're grateful for the time that you're taking to do this, knowing that your time is very limited. So with that, we will get right into things. We have a really full schedule. I would like to overview our agenda quickly and then just go over a few logistical issues. First and foremost, my name is Patrick Lee. I'm the School Finance Director with the State Board of Education. And it's great to be with all of you today. We have most of our, if not all of our school finance team here, as well as others from USBE, including Deputy Superintendent Scott Jones that will be joining us, and Deputy Superintendent for Policy, Angie Stallings. We appreciate everyone that has contributed to the program. So with that, I do want to do a quick overview. Our first agenda item will be Grants Compliance 101 with Tony Onofredi and Rebecca Donaldson. That will be followed by Budget and Policy Changes and 2021 Legislative Session with Deputy Superintendent Scott Jones and Deputy Superintendent Angie Stallings. That will be followed by myself and MSP Administrator Jake Houtrow. We'll discuss issues related to average daily membership and funding. After that will be State Education Funding Overview by Dale Frost, Fiscal Policy Analyst for USBE. We'll probably take a break in here somewhere because it's going to be quite a lengthy afternoon, but with loads of fun stuff, not Disney, but we will make it as fun and enjoyable and interesting as we possibly can. At 3:15, we'll have Child Nutrition Financial Management and Updates with Kathleen Britton and Kimberly Loveland. At 3:45, CARES Funding Update with Sarah Young, and 4:15, School Finance Update with Danny Davis, John Palmer, and Dallin Punier. So one thing is, because of our tight schedule, we will probably have a challenge with people asking questions during the presentation. That does not include the chat, of course. You can put questions anytime you would like in the chat. We will be monitoring the chat, and we will try to chime in and respond to those questions at the end of the presentations. We may adjust that if we can. If there are any questions that we're not able to get at during this meeting, we will absolutely do a follow-up via email to ensure that that information gets out to all of you. With that, I think we will probably go ahead and dive into our afternoon training, which we're supposed to go from noon until 4:30. So we hope you can join us for all of it. We'll start out with Grants Compliance 101 with Tony Onofredi, our Grants Compliance Officer, and Rebecca Donaldson. So we'll turn the time over to both of you. Hopefully we'll be good on our screen here. So we'll do a double check and make sure you're able to share there, and then we'll move forward. Sorry, one final thing. This is being recorded. So if there are parts of this that you're not able to participate in for meetings or otherwise, you can go back and watch that on the YouTube version of it. But yeah, we do hope you can join us live now. So thank you. Tony, Becky, we'll turn the time over to both of you.
Thank you, Patrick.
Good afternoon.
So I'm waiting to see the slides.
Okay, Tony, let me double check on that to make sure that we have that up for you guys. Pat, do we have the slides ready to go for Tony and Becky?
Typically people present their own slides, so I didn't know that I needed to do that, Tony.
I'm happy to do that.
No, that's okay. Tony, I think that will make it much easier. You can do the progression of the slides a lot easier as you go along. So if you want to go ahead and share your screen with the green share down there, and then we can confirm that you have that up. Okay, so that is showing. And then if you want to go into the slideshow then that should bring it up. Okay, yeah, you're good to go.
Thank you very much. And I appreciate this opportunity to speak on grants compliance. This is a basics presentation. And as Patrick indicated, please insert any questions into the chat. And I also want to thank Rebecca Donaldson for co-presenting with me today. Just a quick overview. We're going to talk about sources and types of grant funding, grant regulatory requirements for public education. We're going to spend some time on the federal grant uniform guidance and reimbursement requests from USBE, direct and indirect costs, allowable and unallowable costs, restricted and unrestricted funds, as well as fiscal monitoring efforts. And again, we'll try to share any best practices and case studies along the way. So Becky, feel free to interrupt me at any time with specific situational examples. And so to start off with, just taking a very high level overview, what is a grant? A grant is a financial award or an in-kind resource that's provided by a governmental agency, nonprofit organization to fund a specific project or research proposal. And that's very important to understand. The grant is being awarded to fund a specific project or research proposal. And different grants require different levels of compliance and reporting based upon the type of funding that is being provided. So that's a very key concept to keep in mind. What are the different types of grant funding? Well, there's competitive funding where selection's based on the evaluation of a reviewer or a team of reviewers. You see that a lot in higher education with grants being submitted perhaps to the National Institutes of Health or the National Science Foundation in particular. There's formula funding where awards are allocated to eligible entities according to population or other census criteria. They have to meet minimum requirements of the application process and show that they're entitled to receive money. There's continuation funding. So this is where award recipients continue to receive funding or have the option of renewing grants for subsequent years. And then there's pass-through funding, which we use quite a bit in public education through the Utah State Board of Education. A lot of our funds are given to us by the federal government, particularly the Department of Education, for further distribution to local governments or local education agencies, LEAs. So we deal a lot with pass-through funding in our world in public education. It's a quick overview of what a grant is and what the different types of grant funding are. This slide is relatively important. This shows all of the grant regulatory requirements in public education. And you can see that on the federal level, the Code of Federal Regulations, the Uniform Guidance or EDGAR, the Office of Management and Budget provides a lot of regulations over how federal tax dollars, federal funding is being used. And the Utah State Board of Education needs to maintain compliance with these federal laws, as well as state statutes, the Federal Funds Procurement Act and the Utah Procurement Code in particular, as well as Utah Administrative Code, such as Title R277, which is commonly referred to as the Utah State Board of Education Board Rules, as well as administrative services, purchasing, and general services. And of course, in this complex world of grants, there's a lot of other relevant policies or funding agency guidelines, local ordinances that we need to be aware of so that we can remain in compliance. And we're very proud to say that Utah has a very strong culture of compliance. We're recognized nationally as having a very strong ethical use of funds and a very good record of being in compliance with this myriad of federal laws and state statutes and Utah Administrative Code and et cetera. And we want to be your partner in compliance. We want to make sure that our compliance efforts, both at our level at the USBE as well as the local levels, are being adhered to. And we, again, look upon ourselves as your partner, as a resource in helping to maintain compliance with these different laws, statutes, and codes. Becky, did you have any comment on this?
Not at this time, Tony. Thank you.
Okay. So grant regulatory requirements in public education. As part of our mission at the USBE, as I indicated, we're responsible for complying with federal laws, state statutes, and administrative rules. And again, I outlined the pass-through funding as one particular example that has a very large amount of funding in terms of dollar amounts. And we like to establish best practices and processes to distribute, monitor, and support resources to the LEAs. So let's talk a little bit about federal grant uniform guidance. This is what is commonly referred to as EDGAR. And I'm going to give you in the slides citations to the different key areas of compliance that we need to keep in mind when we're dealing with federal awards. One is the financial management of those awards, and how we expend and account for funds needs to be in compliance with the USBE chart of accounts. I think one of our earlier presentations this morning went in depth about chart of accounts. I have a link there for you in the slides that will bring you to that information. We need to meet minimum documentation standards that includes records of identification, disclosure, effective control and authorized uses of funds and property and other assets. We have to show written procedures for cash management and the allowability of costs. We're required to provide sufficient evidence to support allowable direct costs, cost allocations, the applications of indirect costs. And as you learned this morning, the indirect cost gets kind of complicated. And we can assist with that. We need to abide by the terms of the annual indirect cost agreement with USBE. The LEAs, the public charter schools need to abide by those terms of the annual indirect cost agreement. And we need to implement internal controls that affect the allowability of cost. So there's a citation there, 200-302, that's very important when it comes to financial management. Also, there's many internal controls that need to be in place. Establishing and maintaining internal controls helps manage compliance and complying with federal statutes and regulations, the terms and conditions of awards. It helps to evaluate and monitor LEA's compliance with the terms and conditions of subawards. We need to take prompt corrective action when instances of non-compliance are noted in audit findings or monitoring reports. We really like to try to put up the stop sign before the accident, so to speak. So if there are corrective actions that need to be taken, we want to get those taken care of promptly. So we don't need to worry about other findings or instances of non-compliance occurring down the line. And we take reasonable measures to safeguard and protect personally identifiable information and other sensitive information. So this citation deals with internal control requirements. There's also record retention requirements. Financial records, supporting documents, statistical records must be maintained for 3 years from the date of submission of the final expenditure report, or longer if the Utah Records retention schedules apply. And I have a reference there that you can refer to if that is applicable to your particular circumstance. But a key point here is that the USBE submits a final expenditures report by December 31st of the year that the grants expire. So subrecipients' 3-year retention cycles start January 1 of the subsequent year that the grant expired. So if the grant expires in 2020, then you want to make sure that you're maintaining those records beginning January 1st of 2021 for a 3-year period at a minimum. Looking further in the federal grant uniform guidance, access to records, LEAs must grant timely and responsible access to any documents, papers, or other records pertinent to the federal award for any audits or examination, excerpts, transcripts. So this speaks to a slide that we showed earlier about the importance of maintaining good records and maintaining appropriate documentation. The citation is there for any cost sharing, matching, or maintenance of effort requirements that are outlined in subaward agreements. And then there is the citation that defines the period of performance. And what's key here is that LEAs must only charge any allowable costs that are incurred during the period of performance. And we need to keep that in mind, especially when we get into the late spring, early summer months, or coming up onto the new fiscal year. We need to make sure that the period of performance is being reflected in the requests for reimbursements that are made for allowable costs. Allowable costs incurred during the period of performance are must be charged during that time frame. Procurement. We can do a whole presentation on procurement. I did one recently with the EdPAC group, but LEAs must maintain oversight to ensure contractors perform in accordance with the terms, conditions, and specifications of their contracts. The LEAs must maintain written standards of conduct that covers conflict of interest and gratuities. So on the personal individual level, each LEA must have written standards of conduct that address conflicts of interest. That then extends to covering organizational conflicts of interest as well. If it has a parent, affiliate, or subsidiary organization that's not a state, local government, or Indian tribe. So conflicts of interest are on 2 levels: personal conflicts of interest or individual conflicts of interest, as well as organizational conflicts of interest if the LEA has a parent, affiliate, or subsidiary organization that is not the state, local government, or an Indian tribe. And finally, LEAs must maintain records sufficient to detail the history of procurement, adequate to demonstrate compliance with federal and state law. Did the procurement need to be done by bid, by sealed bid? All of those regulations are spelled out in that citation that I've referenced to you, 200, 317 through 326. And again, we can help with procurement issues. Zach Christensen and his department, as well as my office, we can help point you in the right direction to make sure that you're following appropriate procurement procedures, and most importantly, that you're maintaining records sufficient to detail that history. So if we are questioned or requested to document the process, we have that information readily available to share. Payments. The USBE requests funds from the federal government only after expenditures have been incurred and paid. So we don't get funding from the federal government until expenditures have been submitted to us, approved, and paid out. So the LEAs, it's very important that they maintain written procedures to ensure that reimbursement requests from the USBE are made only when expenditures have been incurred and paid unless it's specifically provided in the terms and conditions of a federal subaward from the USBE. And I have a reference there for you about fiscal and auditing practices for LEAs. The key teaching point here is that the LEAs need to maintain written procedures to ensure that the reimbursement requests are made only when expenditures have been incurred and actually paid. In the event that it's determined that an LEA has requested funds in advance of an expenditure, cash advance has occurred and interest will be calculated on that portion of federal funds deemed to be in advance, and interest may be applied or required to be repaid to the USBE immediately. So very important to make sure that reimbursement requests are made only after expenditures have been incurred and paid. So I want to take a brief detour here, and I think Becky will chime in here with some additional information for us. But when we're talking about reimbursement requests from the USBE, look, we're very much aware of the volume issues that LEAs have to process. We know all of the hard work that you're doing, and we understand that when you make a reimbursement request from the USBE, that there's a volume of work involved as you're preparing that information and making that submission to us. We're sensitive to that. So here's, again, we want to be your partner. We want to be of assistance to you in making those reimbursement requests and making sure that they're approved and that the funds flow very smoothly and quickly back to the LEAs. So couple of key points here: gather and review all reimbursement information prior to submission and ensure that it clearly demonstrates that the expenses were necessary and reasonable for the proper and efficient performance and administration of the grant or award. Earlier, we talked about the grants funds are awarded for particular projects or programs. They have a specific purpose. The feds are looking for a specific outcome when they're quote unquote investing federal grant money in public education. So when we're making reimbursement requests, we need to make sure that the reimbursement information clearly demonstrates that those expenses were necessary and reasonable for the performance of that grant. Another point is to prepare general data, including internal invoice numbers, the internal approver, expense fiscal year, the start and end date of the invoice period, making sure it's within the period of performance as we spoke about in a previous slide, the budget category, being mindful that requested amounts cannot exceed 10% of approved budget. Just do a review in advance and make sure that you have the general data, the data that is a very clear and clear-cut and basic for the reimbursement request, right? That the internal invoice number is there, that the start and end date of the invoice period is clearly noted. That'll save a lot of time and prevent glitches within the system when we're submitting for reimbursement requests.
Becky and Tony,
yes.
Just a quick pause for a question in the chat. What about payroll paid in July, August? It is owed since it was earned by June 1st, but we pay 12 equal payments. I'm guessing in relation to the grant reimbursement process.
Let me defer to Becky. Becky, do you have experience with this? How have you handled that with Title I programs?
Well, I think it goes back to your keeping documentations for time and effort. So for personnel paid with various federal education funds, there needs to be a documented record of the time that that individual worked on that particular grant. But as Tony said earlier, federal funds are always on a reimbursement basis only. So until you actually, submit a request, USBE can't draw that money down from the US Treasury. So it's just really important that you have that documentation, for example, that you had paraeducators, teachers, maybe you have a parent-family liaison who's being paid with federal funds. And even though the school year may end, the end of May or the first part of June, and you're paying those individuals through the summer, it's just a matter of making sure you have that documentation.
I also believe that earlier we indicated that the closeout of the grant, everything has to be closed out clearly by December 31st of the year. But we also understand that there's a window of time at the end of, say, from June 30th. There's a window of time there that expenses are going to be still submitted for the period of performance. And we work with you on that. I think echoing what Becky said, making sure that you have the appropriate documentation to clearly show that those expenditures occurred during that specific period of performance, I think is crucial. Patrick, did that answer the question?
Sorry, finding the mute button here. Let me see if Kim had some follow-up. There is a follow-up. So we've had different applications on this. KESP had us file in July and August Title I, and all others allowed us to file in July 5th. So Kim, I'm hoping we answered the question there, but it does seem like there's a follow-up. We might need to follow up on that one a little more specifically after our presentation. Unless you could quickly respond to it, Becky, but it's up to you.
Yeah, let's hold on that. I'm not sure exactly what she's asking. So we
yeah, we do have a couple of other questions, which what I'll do is I will bring these up at the end, more towards the end of the presentation.
Okay.
Because I think we will get a lot of questions on this. We do want to respond to those, absolutely. I think we'll have trouble responding to each of the specifics, and we might have to work on doing that in an email, but we'll see how far we can get.
Okay, and I'll just add in general, as we spoke in an earlier slide, yes, we have the federal laws, the state statutes, the administrative rules, but there are also the specific program terms and conditions that are outlined generally in your grant award notice or in your award documentation that may speak specifically to a policy or procedure on how a reimbursement is being made in this case, for example, perhaps on the payroll that crosses the fiscal year note. So we take that into consideration as well. But yes, in the interest of time, we'll move forward and then we'll try to address these more specifically. And I'm happy to follow up, and I know Becky is as well, individually after the presentation if we need to. But the key point here again is just making sure that that the reimbursement information clearly demonstrates that the expenses were necessary and reasonable and occurred during the period of performance, and that we have the supporting documentation and expense details to appropriately process that reimbursement request. And what do we mean by adequate supporting documentation? Well, invoices, receipts, original bills with proof of payment, itemized description of product or services, check stubs, payroll records, journals, the general ledger perhaps. Anything that, this is a good rule of thumb, the second circular bullet point here, legible, complete, and easily understandable by a third party. In putting together the supporting documentation, what a reasonable third party could look at that information and easily understand that the documentation being provided details and supports the expenses that were made. That's just a good it's rule of thumb. Just have somebody else, another set of eyes, look at this and see if it's adequate supporting documentation. We have a lot of reimbursement requests come in, and we just don't understand what it is that we're necessarily trying to document here or provide as documentation for that particular expense. Contact your appropriate USBE program staff in advance with those questions. It really streamlines the process. It prevents us from having to put a hold on a reimbursement request or deny it because we don't have enough supporting documentation. It's just good to ask that question in advance rather than when we're trying to get all of the information together and then submitting it all at once. And I've left a link in there for you about requesting reimbursements in Utah grants, which is a very helpful link that walks you through the process of how to submit the reimbursements. Becky, any commentary here on providing the supporting documentation and having program staff available to assist with questions?
Absolutely. Yeah, we really appreciate it when LEA staff reaches out to us ahead of time if they have any kind of a question on whether an expense is allowable. We're always willing to help, and we're willing to research if necessary. We'll do that research for you and get back to you as quickly as we can, but we'd much rather that you contact us ahead than have to have one of our fiscal managers send a reimbursement request back. But just a couple of general things with federal funds. You cannot spend federal education funds on food. The only exception to that is if you're doing a specific activity that is for parent engagement. You cannot buy food for teachers or school staff to say, oh, well, they stayed after contract hours to do professional learning, or they came in during the summer months to work on a project. Even though it seems like a nice thing to do to bring in lunch or bring in snacks after school or whatever, you cannot spend federal dollars on food unless it's specifically tied to a parent engagement activity. Another thing is incentives. You cannot spend federal dollars on incentives for students, for teachers, or for parents. So for example, you cannot provide gift cards. So if one of our fiscal managers sees invoices come in and all it says is Amazon, $750 to Amazon, what did you buy from Amazon? You can give students things like pencils and notebooks or a book to read that have a clear educational purpose, but you cannot give them an Amazon gift card or a set of headphones or a toy or some other kind of incentive. You can't provide those kinds of things for parents or for teachers. So if you have any questions, sometimes we have, money that flows out to a school, for example, for Title I, and the principal may say, the kids were so great. They've worked really hard. They've been improving in their achievement. So we're going to take them bowling as a reward, and we're going to use Title I money. That's not something you can do. Okay, it's great that the children worked really hard, that they've improved their academic achievement, but the use of federal education funds to take students on a trip to the bowling alley or to Lagoon or to Boondocks or something like that, it just doesn't fly. So if you have any questions, we're happy to help you. That's why we're here, and we respond to things quickly, and we appreciate when you reach out to us. We're very happy to help you.
Thank you, Becky. I think that's well spoken, and I would just add to that at the USBE we're very proud of the LEAs. We're very proud of the work that public educators do in the state of Utah, and we want to be your partner in compliance. You can see from this basic presentation, there's so many statutes and laws and rules and code that governs these funds. Let us help you and make sure that we're in compliance. We're trying to make sure that there aren't going to be any issues that come up down the line. As I indicated earlier, we try to take a position that we're a partner in compliance, that we're trying to put up a stop sign before an accident occurs, that type of a philosophy. So I know firsthand how helpful Becky and her staff are in particular, as well as the other programs and departments within the USBE. So please reach out if there's any questions. But the key note here is keep in mind that the expenses need to be shown that they were necessary and reasonable to perform the grant, to perform the purpose of the grant, and that there's adequate supporting documentation and expense detail that support that expenditure. So moving on, getting back into the uniform guidance and some more useful citations for you. Remedies for non-compliance. There's specific conditions that may be imposed, including temporarily withholding, disallowing, or wholly or partly suspending or terminating the award. These are things that we want to avoid, obviously. Mandatory disclosures. The LEA must disclose in writing to the USBE within 24 hours of any notification of any suspected or actual violations. Get in front of it. If you're made aware of a violation or a potential violation that might be affecting a federal award, get in front of it. Contact us as quickly as possible, and again, we'll help to walk through this and try to mitigate as much as we can any sort of error. And my experience has been the overwhelming majority of times there's a suspected or an actual violation. A lot of times it's just being uninformed or not knowing that there was something that was potentially wrong with the action, as opposed to an intentional fraud that was committed knowingly and wittingly. But in any event, the take-home message is mandatory disclosures. Contact us within 24 hours if there's any suspected or actual violation that you become aware of. Conflicts of interest, we spoke about a little bit earlier, both individual conflicts of interest and organizational conflicts of interest. There's the citation that addresses the requirement of the LEA to disclose in writing to the USBE any conflicts of interest. Equipment, again, another category that could be a presentation all unto itself, but the main take-home points of this citation is that the purchase of equipment will be authorized by the USBE prior to purchase, will be purchased by and used for the specific federal program for authorized purposes. Again, this might be spelled out in the program award notification or the terms and conditions of the specific award. But these are the uniform guidance citation for equipment. LEAs need to track the purchase of the equipment, conduct a physical inventory, and reconcile their property records at least once every 2 years. and establish an internal control system that adequately safeguards and prevents the loss or damage or theft of equipment. Federal funds cannot be used to acquire equipment software which results in direct financial benefit to any organization representing the interests of the purchasing entity or any of its employees or affiliates. So that is the federal uniform guidance on equipment purchases. And again, it's a very long citation. It's very detailed. I've tried to capture the key bullet points. Again, questions should be directed to the USBE prior to purchase. And it's then at that point a matter of making sure that we're conducting inventories and having an internal control system that tracks the equipment. Suspension or debarment, non-procurement, debarment, and suspension regulations restrict awards, subawards, and contracts with parties that have been debarred, suspended, or excluded, or classified as ineligible to participate in federal programs. Again, we can assist with that, with identifying parties that are not able to receive contracts or are ineligible to participate in federal programs. Audit requirements, LEAs have to comply with the single audit requirements that are outlined in subpart F. I've linked that there for you, and must obtain a federal single audit when it expends $750,000 or more annually in any or all federal awards. So these are audit requirements. Again, contact your program staff, the financial managers, the fiscal monitors of the programs. They can assist you with this. Subrecipient and contractor determinations. LEAs ask all the time, how do I determine if this is a subrecipient or a contractor relationship? The citation indicates that LEAs make a case-by-case determination whether each agreement it makes for the disbursement of federal program funds casts the party receiving the funds in the role of a subrecipient or a contractor. And I've included a very broad general guidelines that's been provided by one of the public education consulting groups. Just a quick checklist to help identify or help you determine if this is a subrecipient or a contractor. If the party is eligible to receive federal assistance and is responsible for program-related decision-making, uses the federal funds to carry out a program for a specific public purpose, has its performance measured according to whether the objectives of a federal program are met, generally those are considered subrecipients. Contractors, on the other hand, have a procurement relationship. They provide goods and services that are ancillary to the operation of a federal program. They normally operate in a competitive environment. They're not subject to compliance requirements of the federal programs as a result of the award agreement as a subrecipient would be. So again, these are general guidelines. It's a quick checklist for you. Again, I strongly recommend that you contact your program staff. They can, again, and the procurement folks can definitely help with this process. So leaving the uniform guidance that provides the laws over federal grants, let's go back a little bit to Grant Compliance 101 and talk very briefly about some key definitions. Direct and indirect costs. Well, so direct costs can be traced directly to the performance of the grant. The indirect costs, facilities and administration, in higher ed, they typically just call these F&A fees. Those are the overhead costs that are incurred during the performance of the grant. But it's very important that we're appropriately identifying what a direct cost is and what an indirect cost is. And the citations for these, the classification of costs, very key point here, each item of cost incurred for the same purpose must be treated consistently in like circumstances, either as a direct or an indirect cost. So if this particular item of cost is accurately identified as a direct cost or as an indirect cost, we want to make sure that that's being treated consistently in like circumstances across the board. We don't want to have a particular item of cost treated as a direct cost here, and then it's treated as an indirect cost over there. It needs to be consistent across the board. Direct costs identify specifically with the particular final cost objective or can be directly assigned to activities very easily and with a high degree of accuracy. It's very apparent that this cost is directly related to the project. Salaries of administrative and clerical staff are normally treated as indirect costs. Okay, so that would be one example where it would be across the board treated as an indirect cost. The key here is that we're consistent with our identification of direct and indirect costs. And an indirect cost has a federally recognized indirect cost rate that's either negotiated with the pass-through entity, the USBE, or de minimis indirect cost rate. And again, an earlier presentation this morning went into some detail about indirect costs. I wanted to provide you with the direct citation that you could refer to that may be of additional desktop reference for you when it comes to direct and indirect costs. Allowable and unallowable costs. Some of the factors that affect the allowability of costs. Was it necessary, reasonable, and allocable? That's the key phrase in the citation. Was the cost necessary, reasonable, and allocable to that federal award? Does it conform to any limitations or exclusions that are set forth as to type or amount of cost? Are we consistent with policies and procedures that apply uniformly to both federally financed and other activities of the non-federal entity? We're consistently treated as a direct or an indirect cost, as I just explained. It's determined to be in accordance with the generally accepted accounting principles. It's not included as a cost or a matching contribution of any other federal grant, and it's adequately documented. So in the federal uniform guidance, when it speaks to factors that affect the allowability of costs, these are the key items that are used, and I put those there for your reference. Unallowable costs, expenditures that are directly attributable to governance, unallowable costs, salaries, expenditures of the office of the district superintendent, the governing board, election expenses, expenditures for fringe benefits, which are associated with unallowable salary expenditures. These are generally unallowable costs. Again, further considerations for selected items of cost. This citation mentions specifically, it gives you a list of some commonly allowable and commonly unallowable costs, but it mentions that failure to mention a particular item of cost is not intended to imply that it is either allowable or unallowable. Basically, when you go to that citation and you look at the lists that are provided, it's not all inclusive, is basically what they're saying. They're giving you some examples. The key point is the determination of allowability should be based on the treatment provided for similar or related activities, similar or related costs. We're being consistent across the board. The local education agency delegation agreement, again, they spoke a little bit about this earlier this morning when we spoke about indirect cost rates. The USBE calculates indirect cost rates. Our plan and our methodology is approved by the US Department of Education. We've had, even recently, over the past few weeks, multiple meetings with the US Department of Education, with the with the director over their indirect cost rate division to make sure that our plan and methodology is approved by the Department of Education and supported by the Department of Education. Our indirect cost rates for federal restricted and state non-restricted programs are calculated from the annual financial report data and other information that's in UPEFs, as explained this morning. Data from 3 prior even odd fiscal years are used to determine the rates for the upcoming fiscal year. So the 2020 rates were determined by data that we had in 2014, 2016, and 2018. The data that's used for the fiscal year 2021 rates are fiscal year 2015, 2017, and 2019. I just wanted to give you some background on indirect cost rates so that you knew and could rest assured that our plan and methodology is reviewed and approved by the Department of Education, and we're in compliance with their policy regarding indirect cost rate calculations. So the LEAs can determine if they want to negotiate an indirect cost rate for a fiscal year. You can use the one that we calculated, or you can use a lower rate, but must apply it consistently across all programs. Here's that theme again, consistently across all programs. The approved indirect cost rate is in place for the entire fiscal year. And when costs are allowable, when indirect costs are allowable, they must be claimed. So again, we can't have, an indirect cost rate being used for this program and then a different rate being used for another program, or we're going to just use it for part of the fiscal year. It has to be consistent across the board and in place for the entire fiscal year. And when costs are allowable, they must be claimed. Quickly, I'm keeping an eye on the clock. Restricted and unrestricted funds. The key thing here is that the flexibility awarded by each type of funding is very different. Restricted funds are available for use only within programs for which they are specifically granted, whereas unrestricted funds are available for broader, more discretionary needs of the LEA. And I've given you the definition of what our our restricted indirect cost rate and our unrestricted indirect cost rate, how they are defined and used. And this information is readily available on our website. I believe I have a link coming up for you that will address this. And there we go. So our rule, administrative rule 277424 goes into detail about indirect costs for state programs. And on our website at the State Board of Education, under the, in financial operations, under reporting, there's a tab there for indirect costs. And I want to point your attention to the indirect costs overview. It goes into a lot greater detail of the previous slides that I just presented, as well as the presentation earlier this morning. It gives you the whole picture, A to Z. And then the indirect cost type schedule for fiscal year 2021 and the statewide approved indirect cost rates for fiscal year 2021 are also posted. Those are 3 very key documents I would strongly recommend that you reference. Lastly, I just wanted to talk very briefly about fiscal monitoring. Our fiscal monitoring efforts are risk-based. It's risk assessment. We're required to ensure regulatory compliance, that program terms and conditions are being met, and that performance goals are achieved. And as I mentioned a couple of times in our presentation, and I know that Becky concurs with this as well, we want to help build and maintain a strong culture of compliance. With our fiscal monitoring is a tool. It's a resource for you to analyze key compliance areas, including time and effort reporting. That's a big one. Payroll expenditures. I thank the person that raised that question earlier in the presentation. Non-payroll expenditures, asset management, grant management procedures in general, fiscal monitoring is there to help analyze these key compliance areas, and again, serves to as a resource so that the USBE is a partner with the LEA in being in compliance with this multitude of regulations in public education. Key take-home message from this slide: lack of proper documentation to support the use of federal funds can result in audit findings. Document, document, document. It's the best advice I can give you as a grants compliance officer. It will help you immensely, and be in contact with your program staff, with your program managers, because they can answer a lot of questions for you. And with that, I will just open it up to Becky and to Patrick if there's anything that we'd like to address specifically at this time. If not, our contact information is here, both for my office as well as for Becky. But I very much thank you for your attention. And again, I turn it back over to Becky and to Patrick.
Thank you, Tony. I don't have anything more to add, so I'll turn it over to Tony.
Okay, I appreciate both you guys and your presentation. Excellent information. One regret that we have is a tight schedule. We have a lot of questions in the chat. I want to get to those, but I think what might be best at this point is for us we're going to track those questions in the chat, and we'll come back to you all with an email, which provides some answers to what you're asking. I hope I didn't discourage anyone from putting questions in there either. We definitely want you to continue to do that. Any questions that you have as we go throughout, please put those in there because we want to get the answers to you. We just might not have enough time at this moment to be able to do it, and I apologize for that. But Tony, Becky, thank you for the presentation. Very excellent information. We will continue now, moving over to Deputy Superintendent Angie Stallings. And I want to make sure that that you're able to share your screen and your presentation. So let's make sure that you have that before I move off the screen here.
I think I do. Can you see, it says 2021 general session request for statutory changes?
Yes, ma'am. That's up and going. So you should be good to go.
All right. Well, wonderful. Thanks. Should I just go ahead then, Patrick? I apologize.
Yes, absolutely. Okay. We need to keep the wheels moving. So let's go forward.
Wonderful. Well, thanks, Patrick. Thanks, everyone. For those of you who don't know me, my name is Angie Stallings. I'm the Deputy Superintendent of Policy with the State Board of Education. And part of my duties with the State Board is to work with the legislature to take the board's requests and their priorities, along with State Superintendent Dixon, as well as Deputy Superintendent Scott Jones and Patty Norman. We work together with the legislature to try and get bills drafted and get appropriations made. So what I'm going to do today is I'm just going to give you an overview of our current list of statutory requests that we're pursuing. So almost every item that you see on this list, we're looking at getting bill files open, or we already have legislators who've opened bill files and we're working with them on these. I am happy to answer questions as we go along or at the end. And I don't have my chat open right now, but if Patrick or somebody else can be monitoring chat, if there's something that seems like it would be best to answer in the moment, please don't hesitate to stop me. I'd rather answer questions as we go along. So there's probably about, go ahead, Patrick.
No, I was going to say, I'll be monitoring the chat, so we'll bring up any questions for you.
Perfect. Thanks, Patrick. So just by way of comparison, I wanted to let you know that last year, the State Board of Education saw about 41 different requests for statutory changes. So this year, our list is much smaller. I think we've got about 18 or 19 on this list. There are a couple that charter school leaders like yourselves might be more interested in than others. And so I'll try to stop on those and answer questions. So the first couple, I would say a lot of these requests are fairly technical in nature. We're not asking for huge changes. So I'll try to just briefly go through some that are really more minor and then stop on ones that are more significant or that you might be more interested in. So the first is just eliminating some deadlines and allowing some flexibility in code for our school children's trust section, and how the systems that they're using, they just switch from one system to another system to monitor that program. I would say that the changes in this first request are fairly minor and mostly impact USBE's administration of the program and things we need at our level more so than you. Number two, there's some language in code regarding professional learning that it's constraining and maybe a little outdated. And so what we'd like is the ability to define professional learning in board rule rather than have it in statute. So it would just be repealing some language from that section of code there and then giving the board the authority to define professional learning in board rule. The next one is also somewhat technical. We have an existing competency-based education program. What they would like to do is rename that or rebrand it to the Personalized Competency-Based Learning Grant Program. And again, most of the changes in this bill will be fairly technical and also be more of a rebranding of that program. Number four, some of you may be aware that when the State Board of Education adopts or revises new academic standards, that we have a parent review committee. It includes 15 members on that parent review committee. Currently, 5 of those members are appointed by the board, 5 by the Speaker of the House, and 5 by the President of the Senate. Historically, we've had a little bit of a tough time getting names for those committees, and it's then slowed the process down. So our board is interested in potentially using our existing process that we use for all committees that we have, which is we usually publish nominations for openings for committees like this and then receive applications. Then the board vets those and appoints members to something like this parent review committee. Instead of just doing the 5 members, the board would like to be able to appoint all 15. So we'll be working with the Speaker of the House and the President on that one to see if they're amenable. But that we're hoping would speed up the process for those parent committees to be put in place. The next 2 are reinstatements of 2 programs that were repealed in June of last year. Some of you may have received funding under the MOST program. It's the Mathematics and Science Opportunities for Students and Teachers. This program provided funding for math teachers and science teachers that extended their contract. Maybe they did after-school programs or during summer school programs, et cetera. That program was cut this last year, not just the funding, but also the statutory language. And so our board asked us to go ahead and seek legislation to reinstate that program. Now, in order for that program to actually move anywhere, it would also need to receive some funding. So previously, it was funded at $6.2 million. And in the 2020 session, we actually got that appropriation raised to $7.2 million, but then it was quickly cut. So we'll be working to see if that bill will be funded this next year. Same with number 6, the Intensive Services Fund Program. That program was also cut in June of last year, not only the funding, but the language, and our board would like to see that program reinstated. And in a minute, you'll hear that our board did prioritize $12 million of one-time funds to support that program over 3 years as one of their fiscal priorities. And just a side note to this, currently, as I said, that program has been repealed, there is a small amount of federal, we do have a small amount of federal dollars that do come to us under the Intensive Services Program. And our board, just last week, the Finance Committee reviewed a new administrative board rule dealing with the distribution of the federal, the funding that comes on the federal side for that program. And if this bill were to pass during the upcoming legislative session and the legislature were to fund that program, it's likely that we would use that distribution formula in the updated rule to distribute the state dollars as well. Okay, the next one, number 7, came to us from our colleagues from the Utah Department of Military Affairs. They would like to see some barriers removed for students who are either about to move into our state or leaving the state to another state by way of allowing students to participate in virtual school either early. So let's say that they're in Georgia and they're about to move to Utah, that they could enroll in a public online program while they're still in Georgia, anticipating that they're going to be in Utah later on, or vice versa. Let's say a student is in Utah and they move to Georgia, but they want to finish out their school year with that virtual program. These are things that the Department of Defense is looking at and hoping for, and they will use whether or not a state passes something like this as criteria for determining future base placement. And some other things would be to facilitate easier enrollment and registration, all of this to help our students who are from military families. And just FYI, we have an accompanying board rule for any of you who live near bases who might be, your school is located near, say, Air Force, Hill Air Force Base. There's a new Purple Star program. I'm trying to remember if that was the name of it, but we've codified that in board rule. It's kind of like getting a designation like a STEM school. You can get be designated as a Purple Star school, which says that you are a school that's military friendly. So you may be interested in that. If you have questions about that, reach out to Ben Rasmussen in our office. Next, 8, this is probably one of the bigger pieces of legislation that we'll be seeking this year. It's amendments to the state's assessment and accountability provisions due to COVID-19. Some of you may have been following the board's recent motions that, and this was based on the board's assessment and accountability policy advisory committee's recommendations that we move forward with assessments this spring, and but we look at getting some flexibility with respect to accountability. So that would be something like along the lines of waiving or eliminating letter grades for schools, for example, and or using students' academic performance on assessments in a way that might label or penalize a school. So that will be probably the biggest piece of legislation, one of the biggest that we'll be working on this session to provide some flexibility related to accountability. Related to that, again, last week, our board approved our staff seeking a waiver from federal accountability as well. So right now, it looks like we will move forward with assessments as normal, but the accountability portion of how that impacts your schools and any kind of labels or negative impacts related to accountability or those assessment results, we're hoping that will be alleviated or less strict or less penalizing. I'm trying to think of the right word. So. Okay, 9, one that you might be following, because I imagine many of you work on your school's reporting requirements. Recently, we had a performance audit of public education reporting requirements, and we've been working with the Education Interim Committee, and specifically Representative Pulsipher has kind of taken the lead on this to eliminate some reports, and then also to find ways to streamline and eliminate elements of other reporting requirements where maybe they're just a little different than, say, what the feds require or another state program. So we'll be working with Representative Pulsipher on a couple of bills related to public education reporting requirements. Next, currently you are, and you actually aren't, so I might quickly skip over this one because it's mainly school districts who are required to do this, but you may be aware that school districts are required to provide a parent seminar on mental health, bullying prevention and safety, and they are supposed to let charter schools know about this seminar. Well, it's a little difficult in today's environment to have a big parent seminar in an auditorium. So we're going to be looking at making sure that schools can provide that parent seminar virtually and not necessarily be required to gather. The next one is really related to, many of you may know that private and homeschool students can also participate in the statewide online education program. We do a lot of support for providers and students and families who participate in that program, but we've never received administration. And so our board has authorized us to seek some statutory language to be able to use a portion of that appropriation for staff to administer and support the schools and students who are participating. The next one, again, doesn't impact you as charter schools since you do not receive transportation funding, but we'll be seeking a waiver for the miles portion of how we calculate transportation funding, because this year, as you know, is very unique, and many students are not utilizing transportation, our district's transportation, as they normally would, and many students, we just don't have the same enrollment we normally do. So this next bill is one that I think you might be more interested in. And there's a link here in this document, and hopefully you received a copy of this document that I'm showing right now, because I would invite you to go ahead afterwards to take a look at the draft legislation. HB 469 from last year is a bill that our board supported us seeking. It wasn't drafted until about a week before the session ended, but it's about education audit and monitoring amendments. And it applies to all LEAs, but there are two portions, two sections of the bill that are really specific to charter schools. One isn't necessarily specific to charter schools, but more about your authorizer. It explicitly states that authorizers have a fiduciary duty over their charter schools. And if a charter school closes and there are, for example, federal funds still owing after the charter school closes, it answers the question of who pays that federal reimbursement, for example, and it would require the authorizer to pay, let's say that a school closed and there's an amount owing, the authorizer would, we would use some of their funds to pay it. And if not, then the state board would seek an appropriation from the legislature in order to cover that debt. So really it's applies more to authorizers than to you as a charter school, but it's something for you to be aware of. Has been an issue. Some of you may or may not know, when AISU closed, there were some funds owing that remained owed to the federal government that aren't a traditional debt like a bank debt, or that can just be resolved in bankruptcy. And so, and the section of code that says that any debts, that the state charter school board or another authorizer or the state board of education are not responsible for the debts of a charter school, that language does not apply to the federal government. And so we're seeking some clarification on that. The other thing that this bill does that would impact you, and more specifically would impact your educational service provider if you use, for example, a management company, a third-party management company, it would require your third-party management company, let's say you're switching from one third-party management company to another. And I'll just throw two out there. I don't know all of them, but let's say you're going from Red Apple to Academica West or vice versa. What it would say is that as you, as a charter school, are transitioning from Red Apple to Academica West, for example, that Red Apple certify at the end, before there's that transition, that they certify that your finances, your data, whatever the services that they're providing for you are in good general order, and that certification be provided to your board, your local governing board, as well as to the authorizer of your school, and then also be provided to Academica West. We've just noticed at the State Board of Education level that when there's a transition of service providers, that sometimes information is lost, or that transition hasn't gone as well, or information sharing hasn't gone as well as it could. And so that's in there. Also, there's a requirement in the legislation that if there's an absence of monitoring standards in Utah code or board rule about a certain state program, that USBE or others will use federal monitoring standards for that program. Often when we don't have standards established in a state program, the question is, what monitoring standards do you use? And so that would clarify that if there's no specific standard related to that state program, we use the federal monitoring standards. And that would apply to all LEAs, school districts and charter schools. And I don't know if there's any questions on that one. I think of all the bills on here, that's probably the biggest change that would impact you all. So I'm happy to answer questions before I move on or receive feedback. And you're also free to send me any questions or feedback by email if you'd like as well. So I'll move on to the next one then, Teacher and Student Success Act, the TSSA program. You may know that in there, a charter school, and I'm trying to think how this might differ, but I know many of you have multiple charter schools as well. So under one LEA, what it requires is that the governing board reviews whether you made your academic progress in order for you to have the same flexibility under the TSSA program. And when I say you, it's easier to think of this in a district sense, where a district oversees multiple schools. And so this might be more applicable to a charter school with multiple campuses, because usually a charter school governing board of a school is, I mean, the LEA and the school are the same thing. But really what you're required to do right now is your governing board is required to see if you've made a sufficient amount of growth on your students' academic progress. And if you meet those requirements, you're supposed to get more flexibility with how you use TSSA funding. And if you don't meet those requirements, then the district or the charter school governing board that oversees multiple schools, for example, would maybe dictate more how that funding is used or give you a little less flexibility. So hopefully that helps. You might want to look. I don't know that it impacts you as a charter school, as charter schools, as much as it would a district. And in that case, it impacts the principals, the flexibility that individual principals have within a district's is where their board might have more oversight and give less flexibility if you don't make those academic benchmarks. And since we didn't have assessments in the spring, it's really difficult to show whether a school made progress or not. And so that's why we're looking at making some changes to the code there. The other thing that our board has asked for is that we seek some additional flexibility in board rule for how schools are identified for the school turnaround program. In the last legislative session, the board was given more flexibility with respect to exit criteria. And if any of you are low performing schools and participating in the school turnaround program, you may have been watching our board as they updated that board rule recently, but we'd like to have the same flexibility to do that for the identification as well. This next one is really kind of technical in nature. It's more of a technical change or clarification. There's a section of code right now that defines generally accepted accounting principles and statute to include GASB and FASB, which is correct. GAAP does allow for GASB or FASB, but now that we recently had the change in statute and board rule that explicitly states all LEAs, including charter schools, we'll use GASB. We felt it was best to change that definition and eliminate the reference to FASB, so there's no confusion since other sections of code now state that all LEAs use GASB. So pretty technical. Number 17, some of you may be aware, last session, the legislature passed, it was HB 114, Early Learning Training and Assessment Amendments. That program did a number of things, including providing grants for professional learning to LEAs. And we anticipate, it's one of our board's top funding priorities for this next session. You'll hear that in just a minute from Deputy Superintendent Jones. But we're anticipating, instead of the $5 million that was appropriated last year, a little over $1 million of it was used to implement or provide a statewide math assessment for early grades, as well as provide funding to education students at the colleges for them to take their pedagogical assessment, as well as some money that would have gone to RESAs, which used to be called Regional Service Centers. Our staff is feeling like that portion of the program probably isn't a priority at this time, but instead the full $5 million should go out to school districts and charter schools for professional learning for your teachers in the early grades. We're seeing, based on our literacy statewide assessment, that our first and second graders are really behind in literacy than their peers were in previous years. And so we're seeing that our early grade teachers, so primarily K through 3, they really need some support with respect to more professional learning on how to help students improve on their literacy, especially in this time of COVID, where you might have online offerings or you might have students who've been disengaged. So we're asking for that bill file to be open to kind of change the bill. The program is still actually on the books, but it just may be that not all of the elements of last year's bill we would want to be funded this year, and so some might need to be repealed. And then the last thing is to amend or waive employee evaluation requirements for the 2020-21 school year. This doesn't apply to you all because really the employee evaluation requirements and code apply to our school districts, but many of you might be relying on our employee evaluation model policies or programs, your schools might. And so what we're looking at doing is potentially changing from multiple lines of evidence to one line of evidence. So that's the last one. And I'm happy to answer any questions, and if there are any.
Angie, I'm double checking the chat. It doesn't seem like we have any questions. Just a comment, glad USTAR Most is back.
Good to know.
That's it for the chat for now.
Great, thanks for that feedback. Okay, well then I think I'll turn the time over to Deputy Superintendent Scott Jones.
Yes, thank you, Andrew. Appreciate that. Scott, if you'd like to head right in, turn the time over to you, sir.
Thanks, Patrick. Can you make it so I can share my screen?
Yes, absolutely.
So thanks to Deputy Superintendent Stallings for her presentation. And then, segueing from that into this one, what this is designed to do is to give you a snapshot in time of where the Utah State Board of Education is at for their funding requests going into the legislative session, into the 2021 legislative session for fiscal year 2022. Let me just pull this up here. But let's start first of all with where we're at for revenue. If I can find this.
Is that available for you to share yet, sir?
Yeah, I've got it.
Great.
Hang on, it's spinning. So, sorry, hang on. No, it's not letting me do it. Do you have the tracker, Patrick, that you can pull up?
Let me see if I can find it. I will also double check with.
Pat Gardner had sent it out to the group along with.
Let me grab that real quick. Sorry, I thought we had it set up for you to share there. My apologies. We'll get that for you just now.
So while Patrick's doing that, just to give you an idea about the situation with revenue. So between fiscal year 2019 and the close of 2020, there was a decline in income tax revenue. They estimated about 7.9%. Of course, the income tax revenue for 2020, or inclusive of fiscal year 2020, is still contingent upon an audit. You know, it all amounts to the process that's related to the state CAFR. However, you know, one of the things that we were able to generate out, or that came out from the last Executive Appropriations Committee meeting, which was just in November, and there's going to be another one coming up here, is that the income tax collections look on target for what was anticipated or estimated by, you know, the respective economists and everybody that puts that together. Now, what does that mean exactly? Well, everything is revenue dependent. You know, anything is possible when it comes to funding public education, but everything is not. So again, you know, I think we all agree that we're at the, you know, mercy, if you will, of how much revenue comes in and the ability to fund all of the different requests that are asked for. You know, so there's the base budget itself, and then we go ahead and we proceed along the lines of asking for a yeah, if Dale, if I see you're in the chat room, if you can show the tracker, that would be great. It must be something with my system. I'm on Apple or something, and it doesn't let me do it. But anyway, before I'll just finish with this then, is when we get the revenue estimates, and it gets as we get closer and closer to the legislative session, those all come into line with or for us. So you know, once about the second week or maybe the third week in the legislative session is when it becomes very clear on how much revenue is available for education. But prior to that, we build momentum into the legislative session with the Utah State Board of Education along the lines of determining what their budget requests or their items are. Now the process actually starts with what's called the Budgetary Procedures Act. And the Budgetary Procedures Act dictates that the Board of Education will provide funding priorities or a, you know, budget request to the Governor's Office of Management and Budget, so that the governor can consider those requests as they come up from public education, from the Utah State Board of Education, on whether to place those in her or his budget. So there's a lot of exchange that goes on pretty much from about August through October and November with the Governor's Office of Management and Budget. And simultaneously to that is a process called the Common Data Committee process. And I'll talk a little bit more about that and, you know, what they come up with together. So anyway, usually around the October timeframe is when the deadline is for us to convey or proceed with providing the amounts and justifications to the Governor's Office of Management and Budget for, you know, what the board's priorities are. Now, this year was a little bit different. When the Governor's Office of Management and Budget, or the governor first put out the guidance, kind of late summer, you know, they said they weren't going to take any new additional requests, you know, other than critical budget item requests. And so that's why, you know, at this point, I'll orient you to the type of requests. So we have what's called critical budget items requests. And you can see that in the, so, you know, there's the header, right? USBE funding requests for state fiscal year 2021 and 2022. So these, then you go into the type of requests, and Dell's broken these out really well. If you could just scroll back up to the top a little bit more. No, let's see, go back up. Yep. Then you see like on line 5, critical budget items, line 6, other top priority budget items, line 7, pass-through budget items, 8, USB internal budget items, and 9 is the Utah Schools for the Deaf and the Blind budget items. So later, though, after the guidance first came out, then the governor's office opened it up. And I can't speak for the governor's office, but it sounded to me like their change in our tone or guidance, if you will, was a result of, what I alluded to earlier were indicators that revenue, while not necessarily the greatest shape or the best shape it could be in or should be in, that there was some indications that, there might be some revenue available. And they also, pointed out that there would be likely, everything's subject to finalization and going through the process of some one-time money available, or I guess I would say, significant amounts of one-time money available. But see, more to follow, right? We go into the next Executive Appropriations Committee meeting together, take a little bit of time off for the holidays, and then come right out into January and start the legislative process. I believe the legislature starts on January 19th. So anyway, walking you through this process. So when that changed, the board, so initially the board had given what we identified as our critical budget items. And now since then, with the board meeting on December 3rd, we've updated our budget requests with the Governor's Office of Management Budget. And simultaneously, we keep the legislative fiscal analysts aware and, moving along with us. So there's a lot of great continuity and parallel processes that go between our office, the Utah State Board of Education, the Governor's Office of Management and Budget, and the legislative fiscal analyst. So these numbers, or these requests that we're going to, go walk you through here, are as of December 3rd, which was last Thursday, which was the Utah State Board of Education's last meeting. Now, if we start in the type of request in the first, I guess, category, if you will, of critical budget items, those critical budget items total 167 million, and they're broken out by a WPU value increase of 4%. So if you look at the summary of business case column in the critical budget items, there's two critical budget items that were identified by the board to put forward. And it's that WPU value increase, and Patrick and Dale can chime in here, but my understanding is a 1% increase on the WPU is about 35 million. And so what that would equate to, maybe a little over 35 million, but what that would equate to, if it's funded, if a 4% increase is funded, would be a move from 3,596 to 3,740, as you can see in the summary so far. Then there was also enrollment growth. And I just want to stop here for a little bit and talk to you about, what you see in that summary of business cases. This placeholder amount includes an enrollment growth contingency program in case October 1, that'd be October 1 counts in October 1 counts in October of 2021, enrollment exceeds CDC projections. Now, that CDC abbreviation is Common Data Committee, not Center for Disease Control, right? So the Common Data Committee is comprised of the Utah State Board of Education representation, the Governor's Office of Management and Budget, and the legislative fiscal analysts. Now, I think we can all agree that this year, as it relates to enrollment, is a unique year. I mean, in Ben Lishman, you've got somebody that's been around for decades in public education. He said, Scott, this is one of the unique is, for lack of a better term. I mean, this has just been you can say strange or different year all around for what we've seen as far as enrollment goes. So, we're all going to have to just work together. And, the intent is that even before the end of this school year, we'll do some other unofficial enrollment type counts, much like we did for the initial September 9th, I think it was, September 9th, September 15th, unofficial count ahead of the October 1 count. We'll probably do at least one more unofficial count just to gauge or get an idea if there's, any significant movements. I mean, it is what it is right now. Case counts are up. We're hearing some anecdotal information that it's even causing more migration, if you will, of students into online programs for second semester. We think the juice is probably worth the squeeze to take a look at, enrollment trends, if you will, on an unofficial basis, because we use the October 1 counts officially to do all our calculations. But, I just want to give you a heads up on that we'll probably do another unofficial one. So right now, as it stands, the board's put forward these two critical budget items, an increase in the WPU value and an increase in enrollment growth. So again, the total is 167 million there. At this last meeting, if you could scroll down, Dale, they identified other top priority budget items. I believe there's 6 of them, and they're listed here for your review. Now, does this mean this is final? No. I mean, this is an iterative process. It's a process that's worked really well in the past. As many of you know, over the last 4 or 5 years, public education funding has increased significantly. Again, a lot of it has to do with good economy, revenue base. But I think more of it has to do with all the great things that you and the districts are doing out there, and how much trust and confidence the legislature has in the Board of Education and all the LEAs like yourselves that are out there doing just phenomenal things on behalf of the individual student. So with that, and given, again, where we might, not sure exactly right now where we're at for revenue and what's going to be available, but you have the 2 critical budget items, and now you have these other top priority budget items that as of the December 3rd meeting, the Utah State Board of Education members had identified. So there's early grade professional learning, and I won't read you the summary of the business cases there, but my understanding is Pat also forwarded you those business cases, because we're really trying to make sure that we get into the details with you at the LEA level on, well, what does this mean? What case are we making, or what justification are we making to the legislature on behalf of the individual students that ultimately would affect you as an LEA in a charter school for your respective students. So one is the early grades professional learning. It's, 5 million. We're looking for ongoing in that, or for that particular program. Number 2 would be OEK. 3 is the intensive services pilot program that Angie alluded to earlier. And here's where we get into some of the one-time, where we were given the guidance that, revenue might allow for, or that there would be, significant amounts of one-time money. And when I say significant, I mean, I need to caveat that, or make it, give the perspective of, well, significant within the parameters, if you will, or the environment, if you will, of revenue and all of that's going on and it's affected with the COVID-19 situation. So 4 is expanded access to broadband. I mean, one of the things, early on and, with the soft closure even last year towards the end of the school year is, the identification of the need to get increased capacity in our broadband hotspot areas. And, in all situations, the emergency situations as well. Emergency meaning, areas that have just, struggled to get that kind of access out to the kids. Bridge that digital divide so that we can continue to provide educational services to the kids. So then 5 is support to or for students at risk. Here's one-time money, 10 million. And then 6 is re-engaging learners who are disconnected. So the total of these amounts to 42,200, if I got that right. Yeah. So, but note, that of that amount, the 46 million, 32 million, a large portion of it is in one-time money requests, with 14 million being ongoing. Now, again, as I said, is this the be all end all? No, not necessarily. As we progress together with the board, as the lead in all things public education, and we move together with you and with them and with the legislative fiscal analysts and the governor's office of management and budget, here's some other items for consideration. We break these down like with pass-through budget items, right? That's the title we give them. So this money that flows through to the LEAs. So as Angie stated or pointed out, there's a bill out there right now for most, right? So this is on the list, right? It's going to get it, it'll get its due attention. Where it'll land exactly, we're not sure yet, but, we just want to make sure that you're seeing also what other funding initiatives or programs are out, or are basically on the table for consideration, given, what we know about revenue right now and what we might get for revenue. We're always optimistic. We always think that good things are going to come our way, again, because of all the great efforts and things you're all doing out there. So in addition to most, you have this computer science initiative. You have early college programs, a school leadership initiative, some more for the Beverly Taylor Sorensen Arts Learning Program. Here's one, with small district-based funding. I want to just stop there for a little bit. Okay, that's talking about districts, but currently we're also working with the work group on, analyzing the loss or the reductions in the administrative funding to charter schools. The process that the LFA took to offset those, with the special sessions last year. And so I'd anticipate that, something along the lines of what you're seeing on line 42 for districts will also come to fruition by way of the process we're taking with the group. I mean, I can't say how much or what exactly, we're still working on it. But just note that we're also, very interested in the impacts of reductions in funding to charter schools, to LEAs as well. It's one public education system. We're all one team, and all funding matters, no matter what type of LEA. Next line is the Gifted and Talented program. Then we have the Acadians reading. We're just kind of just going through this, and so I'd if I were you, I'd just look at the summaries real quick, just so you have an idea about this, about these different programs that are on the table. Utah Prime Pilot. Oh, I'm sorry, special education teacher shortages. How do we address that? Utah Prime Pilot program. So there's quite a few of these. So if we can just keep going all the way down to the end, which is POPs provisional. So then if you see the total of these amounts of these requests, we're looking at $40,173,300. So, and these would be pass-through programs or funding that would go down into the LEAs. So the USB has an internal budget as well. So this is money, that we don't flow through down to the LEAs. And these are some of the business cases or funding requests that are being made, that if funded, or if it got to that point, that the board identified it, that, yeah, this is something that needs to go forward, by way of this iterative process I tried to describe to you. These are the programs we're looking at. School social service workers, school fee specialists, student support programs, and data analysts. And again, I know you should have all received this in an email, and if you didn't, we can get this to you. So those total $1,498,000. And then we close out with the Utah Schools for the Deaf and the Blind budget items. A modular for their Mill Creek campus, still warehouse structure. And then now there are steps and lanes as mandated by code. There's an increase or a formulatic process that we take to increasing the salaries for the special education teachers there. So we're looking for, that process to take place. And that's why we have TBD there. Usually we all arrive at, what that looks like as far as how much money is needed for those special education teachers about a week or so before the start of the session. So this summarizes for you where we're at as of the date time group of December 3rd, which is last Thursday. And I've said it before, but I can't say it enough, that it is an iterative process. So what does this mean to you? Well, what we'd like to know is, are we missing anything? Is there anything from you that you don't see on here that concerns you that we could take back to our board? I've been in this position for a little over 5 years now, and I've never seen I've never seen a time in these five plus years where none of the 15 board members are not interested in knowing what it is out there that would make a difference for you or to you. So if you want to put in the chat room, I'm not sure, Patrick, how much has come through on the chat during this presentation, but if you have any questions, I'll take them now, or, I'm not sure if we're capturing them or where we're at for time. So.
Checking the chat, nothing so far, sir. I guess you guys are answering all their questions.
Okay. Well, if you do have questions or you have concerns about the programs, Del Frost is your main point of contact at this level. He's our fiscal analyst. He's tracking all this. He does a great job. of assembling the business cases and getting input. So, if you have any questions or concerns that we didn't quite go deep enough during this portion of the presentation, then, you let him know or work through him. Or you can always reach out to Patrick or myself, for questions about the budget. So I did see something pop up about what are the chances on a 4% WPU value increase. Well, maybe if we have time, this may be where we need to talk about Amendment G or HB 357. What do you think, Deputy Superintendent Stallings? I mean, there by way of Amendment G and HB 357, there's some must-dos, I guess. Is that okay for me to say, Deputy Superintendent?
Yep.
Can you talk about that for a little bit? Actually, can you talk
Sure.
about that?
Yeah, I'd be happy either way. So historically, the board has always asked for 6%, as well as many stakeholders, like I'm sure charter school associations, as well as the school districts associations. This year, with the passage of Amendment G, of course, that means the HB 357 from the 2020 session took effect. And the good news is that means that enrollment growth and close to 2%, it's I think 1.8%, is put into the base budget and will pass. So you may remember last session was the first time, at least the first time in the years that I've been watching the legislature, where they included enrollment growth in the base budget. This year, they'll include enrollment growth as well as the 1.8%. So close to 2% on the WPU will be in the base budget. So that's very good news. And I think, Scott, everything we've seen so far looks like they're going to follow through with that. So you should see that 1.8%, and whatever enrollment growth is determined or landed on finally will be in the base budget. And then after that, you can see the board has asked for 4%. I believe USSA, USBA have asked for 4% as well, in addition to that too. So what are the odds? I mean, I think at this point, and we still don't know for sure, we'll know more with the December executive appropriations meeting, and I can't remember if that's this week or next week, Scott. And then we'll know even more in January and February, of course, what the projections look like. If money looks good, if our economy looks good, then I think 4% I think is a good chance, but it really is going to depend on how revenue comes in and what our economy looks like in February. Really, I would watch and be listening and watching to what our fiscal health looks like as a state in February, because the fact that they're already signaling that they're planning on giving state employees a small raise, they've already signaled that, that's great news, because state employees did not get a raise when LEAs got that 1.7% during the special session. Just, I don't know if you remember that, but a lot of different agencies and groups were impacted. Education was one of the few areas where they repealed a lot of kind of line item programs, but they were able to give a 1.7% WPU. The state employees did not get that increase. And so the fact that they're signaling a pay increase for state employees means they must think that things are going pretty well, because that's usually one of the last things they'll ever state. Scott, what do you think? Anything you'd add to that?
No, that's perfect. It is. I can't emphasize enough that we're just going to, and Angie, our Deputy Superintendent Stallings, talked about this too. Let's just watch the revenue. Let's see what EAC says at their meeting, which I think is next week. See where we land as far as there, because they'll make some significant motions. They typically do in their December meeting, and that's really, to me, probably one of the best indicators about how things are shaping up for the session. Similar process last year with the EAC is that's when they funded growth, right? They made that motion to put 50+ million into the base budget last year, and that was great. Of course, that was pre-COVID and too, but I would encourage all of you to spend time. So all the legislative process is just great and important. Lots of committees going on. But from your vantage point, 2 committees probably mean the most to us. It's the Executive Appropriations Committees meetings and PEA, or Public Education Appropriations Committee meetings. If the legislature does a good job about putting a calendar out, we'll try to keep you informed on all the different dates for those. But if you could listen into those and listen into our board meetings, you don't necessarily have to attend the whole board meeting, but what we just presented here to you today, both what Superintendent Stallings presented to you and what I just presented to you are perpetual agenda items with our board. So these 2 items will be covered again, next month as well in their January meeting leading into the session. Then the board meets on a almost weekly basis, or if not a weekly basis, throughout the session. So if you could get, tuned into that rhythm and, the rhythm of those meetings and listen into those meetings, it's just great information. Just a lot of information because ultimately everything we do is always in the interest of the individual student. And you can see that clearly with our board and with all the staff for the Board of Education, with the LFAs and their bosses, trying to find that balance, if you will, between revenue and, what's in the best interest of the individual student. So it's a great process that we've had success in, even in the past years, but even, right in the face of this COVID situation. I think the legislature's just been super supportive of public education. I have colleagues in other states that, we compare notes and processes so we can learn from each other. And I always hear from them about how much they wish they lived in Utah and what a great, funding process. I mean, to be able to fund an increase to the WPU, given the circumstances that, the nation's under, but that even Utah was under, was just phenomenal. So we're looking for great things together in the legislative session. So I think I'm probably over time, right? We're probably over time, Patrick.
No, sir. We're still good. Still have a bit of time left. We're doing okay. As far as other questions in the chat, we don't have any at this point. Are any other final items that you'd like to cover? We do have a few minutes, but otherwise we can move forward.
I don't, unless Deputy Superintendent Stallings does.
I guess the one thing I would say, if you have opportunities to reach out to legislators in your area or legislators where, that cover the district, the area where your school resides, just as you meet with them, thank them again for that 1.7% increase that we got over the summer, or I guess late spring, and then show them or tell them what great things you would be doing for your students in your school when you're with them. Like, help them see what 4% increase in the WPU would mean to you and your school, your teachers, your students. I think when they hear stories about the great things that are going on in our schools, and when you can give them ideas of how your school would invest in supporting our students and our teachers, that's where they remember those stories, and they're more likely to then invest and pass those appropriations. So anyway, anything you can do to bring them into your schools, have those conversations, those are great things.
Okay, Patrick, we'll turn it back over to you and you guys can march on.
Okay, appreciate it. Thank you both very much. I think we're good on the questions. We're actually good on time. So if we do have a chance, we'll go back to some of the questions from the chat that we weren't able to get to earlier. I don't think we'll do that right now, but we will try and get back to those. I want to make sure that we do have enough time to get through all of our presentations. So next up is myself and the MSP administrator, Jacob Houtrow. So let me see if I can bring up my presentation here, or our presentation on this for average daily membership. And then I promise after this, we will take at least a 5 or 10 minute break. I know this gets to be quite a bit. So let's see. I believe that should be sharing at this point. Jake, can you confirm and let me know if that's looking good for the presentation?
Yes, it's looking great.
Okay. All right, so let me come over here and make sure I have this. Okay, I better do the slideshow, and there we go. Okay. Okay, so we want to talk, let me move this chat box here, talk about average daily membership and the mid-year update. If any of you have listened into the board meetings recently, you will have heard quite a bit of this. We have reviewed it just in different pieces and sections as we've gotten it throughout the Common Data Committee process and working on these things. Let's see. Make sure I can, okay, there we go. Okay, so just want to give a bit of background, you know, a bit of a synopsis of this year and everything that's gone on. So initially in March 2020, COVID-19 impacted Utah schools, resulting in a soft closure of the schools during the latter part of the school year. At that time, concerns were raised immediately as to how USBE staff would respond to the soft closures as it related to average daily membership calculations and potential effects on funding. So the Board of Education as well at the time waived the 990-180 rule for the last portion of the school year 2019-20 and 2020, contingent upon LEAs providing continuity of education plans and tracking membership. USBE staff works in cooperation with business administrators, the Fiscal Analyst's Office, the Governor's Office of Management and Budget to determine the best method for ADM calculation in the COVID situation. And at their October 1 meeting this year, the board approved for staff at USBE to coordinate with the Common Data Committee members to make sure that the most accurate methodology was used to reflect any potential anomalies in the FY20 ADM. Now, reflecting back on the board waiver of the rule, R277-419-9, the student membership calculation during 2020 COVID-19 pandemic. So the rule stating, notwithstanding the requirements of section 7 and 8, the superintendent shall calculate an LEA's membership for days of instruction from March 16th to June 30th, based on the LEA's average rate of membership between July 1 of 2019 and March 13th, 2020, assuming contingent upon two things, that the LEA has submitted a continuity of education plan on or before June 1st, and the LEA provides educational services through the end of the LEA's regular school year calendar. So some of the questions that came up, and I'm sure a lot of you had these types of questions, what types of effect would a soft closure have on membership? Would the current year FY21 funding be affected if the FY20 membership dipped? And as well, what will happen in future funding in fiscal year 22, especially considering that the funding is based off of prior year ADM plus growth. As well, what happens if membership declines dramatically one year, but bounces back the next school year or in the same school year? Essentially, how do we stabilize funding with any potential anomalies in fiscal year 20 and possibly in fiscal year 21 membership? So in consideration of all of these different questions, an ADM calculation plan, or I guess an exploration of what things would look like, taking into account the soft closures of the schools, how would ADM translate into the weighted pupil units, which is the final step in the CDC process. So we had discussion with the participants in the CDC, the legislative fiscal analyst in the governor's office, and this was based upon approval during the October 1 board meeting for USB staff to work together with the CDC members. Different methodologies were considered initially by both ourselves, LFA, GOMB, to not only account for the COVID situation, but also to stabilize funding for the current fiscal year and next fiscal year. Finally, after a lot of discussion, a lot of different analyses, agreement was reached on what the FY20 ADM calculation would be, and that consensus was an agreement between all of our offices of the LFA, GOMB, and USBE. There was some consideration initially of a COVID type proration. However, we found that this was somewhat artificially inflating ADM and was not accurately reflecting what had happened during the soft closures. What ended up being a more accurate reflection was to look at ADM and compare what it was to previous years based upon the ADM data that was prepared and submitted by all LEAs by the end of fiscal year 20. And then of course, certified in early July. So what I would like to do is to turn a few minutes over to Jacob Houchow, our MSP administrator, to kind of walk you all through what the thought process was, what got us to where we are now in calculating the FY20 ADM, which of course affects the current fiscal year and estimates for fiscal year 22 budgets. So Jake, I'll just turn some time over to you now, sir.
Alrighty, thank you, Patrick. Yes, so we've prepared this kind of graphic that shows kind of the calculations behind the average daily membership and shows where we ended up. Could be a little bit cleaner there, but I'll try and guide you through it. So essentially what we looked at was the October head counts as a ratio of the average daily membership to the head count itself. On the bottom of the screen, you can see those ratios calculated for both kindergarten and grades 1 through 12. You have a 0.9798 ratio in kindergarten, ADM to head count, and a 9692. And that's the average of those 5 years, and a 0.9692 ratio in the grades 1 through 12. The highlighted cells above that are the average daily membership using our initial calculation to calculate average daily membership, which was a kind of a proration method that was used. As you can see, the total ADM was 651,937. And as Patrick mentioned, there was a consensus agreement amongst ourselves at USBE, LFA, Legislative Fiscal Analyst Office, as well as Governor's Office of Management and Budget, that this ADM figure was too high. And so we used a prediction using those ratios, a predictive model, to get those orange or calculate those orange highlighted cells of 646,863 total ADM, which actually is right where we landed in terms of the reported membership totals from the entirety of the prior school year. That total is that blue highlighted cell of 646,803. So it was the reported membership, in other words, was right on the predictive measurement using the ADM to head count ratio. So that's where we landed up. We're using the reported membership totals from school year 2019-2020 to calculate the average daily membership. We're not applying any sort of proration factor to that. We can go to the next slide, Patrick. We've already gone through this today in the earlier training, but just we'll go through it quickly again. In section 53F-2-302, this is just how this is the codification for how weighted pupil units are calculated. The method by which they are calculated is the prior year plus growth model, meaning prior year ADM times by the growth, which is the change in October 1 head counts from prior year to the current year October 1 enrollment count. We can go to the next slide if you would, please, Patrick. If you have your backups open, we had attached in the backup that we sent out to you a spreadsheet. I'm going to pull it up on my, Patrick, would you mind pulling that up?
Yeah, let me, I'll have to close up let me close the slide.
Yeah, that's fine.
And then I'll bring these two up. Hold on just a minute. Let me see if I can share these as well. Okay, and then let me share a PDF document here. Okay, I think do we have that one showing now, Jake?
That's the enrollment counts, but let's take a look at the total basic school cost
Oh,
comparison.
yes. Okay, let me
Yes,
just
that's it.
here.
So we won't,
Too much.
you know,
Okay.
I just want to briefly reference this document so that the participants know exactly what it is and what it's doing. Essentially, it's a comparison from the legislative estimates frame, which is, for the most of the year, estimating FY21, most of the calendar year, and the payments that were made for the first few months of the fiscal year were based on the legislative estimates on the left side of this sheet. On the right side is the mid-year update funding figures that are currently being used while we're processing all these budget amendments this last month and in December. So this is, again, taking a look only at the basic school, meaning the above the line programs. And you can see there's quite a bit of variance in funding across the LEAs. For charters, they range from 57.8% increase in funding for a particular LEA to a decrease in 46.3% funding for an LEA. So there's quite a variance there, which is expected given the circumstances with enrollment counts being all over the place and so forth. So a couple of caveats, or one caveat that I'd like to make, is that this was prepared in early November. So there are some small updates to the mid-year small updates to this funding table on the right that you see. But overall, those would be small or minor variances, and this should hold. And again, it doesn't include charter school local replacement because that is a below the line program and not a WPU program. And if anyone ever has any questions on their school's funding, please reach out to me and I can help you work through any questions. And we can go back to the slides, Patrick, if you don't mind.
Get back over here. Okay, is that sharing?
Yes,
Okay.
it's not in slideshow format.
Okay, let me get back to the slideshow format here. Okay, so I think you reviewed this one. Should I go to? Next?
Yeah, we can just go to the next slide there. Again, this also is referencing that document we were just looking at. It shows kind of the funding change averages from the legislative estimates time period to the mid-year update. On average, there's a 1.38% increase from the estimates to the mid-year update. Again, the mid-year update is using the actuals, specifically the actual October 1 enrollment counts rather than projected October 1 enrollment counts. So the average for this year was 1.38% increase. The 5-year average is a 0.24% increase. You can see there what the median is and what the change is in the total cost of the basic school program. So it is kind of a strange year that the funding is increasing more than it normally does relative from the projections to the mid-year update. And that's what I wanted to cover as far as the funding goes. Patrick, I'll turn back the time over to you for more information on the enrollment piece.
I appreciate it, Jake. And I think one key thing to note before we go off of this is some of you may have seen that the total for the change from the legislative estimates to the mid-year update is a positive 2.22% for charters in total. However, the distributions, like Jake mentioned, there's wide variations in that. So depending on what the October 1 counts were for your school could significantly impact a change from what you had budgeted off of those legislative estimates to what you're now seeing with the mid-year update and kind of truing up those budgets for what your actual enrollments are this year. I do think that will be something that will be discussed and considered as we move into the legislative session is the fact that, okay, the funding is there and technically there is been an increase in the WPU, as Deputy Superintendent Jones had mentioned before. But the distribution of the funding is a bit more variable, I guess you could say, across all of the LEAs than what it might be in any given year. So with this in mind, of course, we'll continue tracking ADM in the current fiscal year. We'll do the normal certification of that data as we close out the school year next year. And we'll keep in, I guess part of the discussion is how do we, or I guess part of the policy discussion is how far will the legislature be able to go in, I guess, holding harmless a school when in any normal given year, of course, it is always based on enrollment counts, but with some of those fluctuations, how do we take that into account? And that was a really challenging part of the whole CDC process, which I'll review just as we close out here. But in the legislative session, I do think that they will be addressing those funding type issues following the mid-year update, as Jake mentioned, that part of that's already gone out and the rest of that will go in December as we true that up based upon October 1 counts. The CDC have already finished meeting to put together their revenue, enrollment, and funding projections for 22. And so now with all of that information in place, as we get ready for the EAC meeting next week, moving into the session, policymakers will be addressing those funding distribution issues across the LEAs. So stay tuned and stay locked in to find out for some of those things that will be happening. Going back to the Common Data Committee process, and some of this has already been touched upon by Deputy Superintendent Jones. The members of the process include the Governor's Office of Management and Budget, the Legislative Fiscal Analyst, the Utah State Tax Commission, particularly related to revenues, and the Utah State Board of Education, of course. There's normally 3 main meetings in the CDC process each fall: the property valuations meeting, or the consensus revenue, which was reached on October 14th this year, student enrollment projections meeting, and that was consensus was reached for enrollment numbers for the next school year at the November 2nd meeting, and then the weighted pupil unit estimates meeting. And that was finalized for FY22 on November 9th and through subsequent discussions. One thing that occurred this year that was quite different from prior years is there was actually a pre-meeting held to each of the consensus meetings. And I think some of the concern about the anomalies and the data, how this might affect things, was really becoming apparent to all of the offices involved. And so we met in advance of each consensus meeting to ensure that we were reviewing what assumptions we were using, considering the soft closures of the schools and any effects on the data that might have occurred. So looking at the revenue, the FY 2021-2022 basic levy, which is tax year 2021, the projected revenue is $359,650 million in assessed property valuations. The basic levy revenue target for tax year 2021, approximately $545 million. It was $526 million in tax year 2020. $30 million in additional revenue set aside for local levy growth. And then, of course, the Tax Commission will work to set the basic rate in spring 2021. The CDC FY22 enrollment consensus projections. The total projected enrollment for 2021-2022 school year is 673,854. This is in comparison to, I believe, the projected amount for the current year is 675,000 and change. The actual enrollment, now that we've passed October 1 date, was 666,609. You can see some of the different projections for the districts, projecting 17 districts to be slightly down in enrollment next year, projecting 25 districts to increase in enrollment, projecting for the charter schools to increase overall by almost 2%, projecting 33 charter schools to be down in enrollments next year, and projecting 76 charter schools to have an increase in enrollment. So finally, the CDC FY22 WPU estimates. The initial CDC consensus for the basic school program was 891,150 total WPUs, including enrollment growth. And then a final CDC consensus reached at 885,540 total WPUs. So because of some of the issues related to being uncertain how things will look next year with these fluctuations in enrollments, one thing that the legislature is looking at doing is potentially having an enrollment growth contingency, or like a set aside of 7,727 WPUs. These WPUs would be in effect kind of unallocated initially, although they would be part of an Appropriations Act. And then those would be utilized to true up things depending on enrollment counts next year. And those WPUs would be distributed appropriately based upon those enrollment counts. Just for reference, the total appropriated WPUs for the current fiscal year is 886,364. The total growth cost estimate for fiscal year 22, this is an initial estimate, of course, and subject to change depending on revenues and discussions during the session, but that's looking to be 27.8 million ongoing and 5.3 million one time. In reference, I believe last year was about 50 million, just over 50 million in enrollment growth. So just an important mention as well is that the CDC process, with a lot of the issues that have come up due to COVID, some of the challenges that were presented this year, the CDC members are planning to go back and review the process, review the models for projections and estimates for revenues, for enrollment, and for WPU estimates. All of this to ensure that we've got the most accurate process possible, and to ensure that there's continuity across each year despite any fluctuations that might occur, as we've seen over the past year with the COVID situation. And so I believe that meeting is going to be held sometime next week. Jake, is there anything that I've missed that you'd like to add as we wrap things up here?
No, I don't have anything. I just want to address really quick a question that came up in the chat, if that's okay.
Yeah, absolutely. That'd be great.
So it's regarding the charter school local replacement program. Some people were wondering about the changes that were processed on the budget changes that were processed on the November allotment and the resulting payments. They could have gone up or down depending on the October 1 enrollment count. So that's what's important here. For the first few months of the fiscal year, the charter school local replacement was paid on projected student counts. Then we got the October 1 enrollment counts, and now the program is paid on those actuals. The per student amount in the program for fiscal year 21 is $2,562. So it's simply $2,562 multiplied by the LEA's October 1 enrollment count, and that derives the fiscal year budget in charter school local replacement.
Yeah, I appreciate that clarification, Jake. Yeah, it's it is something that could be different depending on the school, but it goes back to the change in enrollments from what had been projected to what it actually was. And so, if there are any serious issues that seems to bring up for any of you schools, please feel free to get in touch with us, and we can talk that over with you. Appreciate that clarification, Jake. Brett, were there any other questions in the chat that we needed to address before we wrap up?
No, I think most were answered. There was a few people that asked about Jake's spreadsheet showing the enrollment growth and decrease. They were asking if that was available, and I think someone responded saying it was sent out. Do you remember the header of that email by chance, Jake? So people can reference that.
If that is a presentation material, it would have been sent out to all the participants. recently, last week, I believe, at some point. I didn't send that email out, so I don't
Okay.
what the
Yeah,
title.
we
of the
can
email
double
was.
check that and make sure that you all have a copy of the presentation, which includes that. One thing I will note is that, I mean, it's data directly from USB's website that was put together initially by GOMB analyst Jacob Wright as we worked together with Jacob in looking at ADM versus headcount and helping us get to a consensus on that. So Jacob helped us with that, and I just want to give him credit for that. Okay, if there are no other questions, I think what we'll do now, we are, looks like a bit ahead of time. I think we can take about let me just double check our schedule here to make sure we're good. Let's see. Yeah, we are quite a bit. So let's take about a 10-minute break. And if we can come back at 2:30, if that's all right with everyone, and we'll resume our presentations. And
We'll try it.
And we'll start that with Dale Frost and continue from there back at 2:30. Okay, hi everyone. That 10 minutes went by quickly. Maybe we should have made it 15 minutes. We are about 15 minutes ahead of schedule, but I think that'll be okay considering how busy we all are. I think we will go ahead and get started back with our program for the rest of the afternoon. Just to review that, we have State Education Funding Overview with Dale Frost, Fiscal Policy Analyst for USBE, Child Nutrition Financial Management and Updates, CARES Funding Update, School Finance Updates, and then we'll adjourn after that. Dale, I had to cut you a bit short this morning, but we won't have to do that this time. So make sure
Make sure I drone on.
Yeah, yeah, right. No, make sure that you're able to finish your full presentation, because I know you weren't able to do that this morning. And it is some crucial information that I think will be helpful. So yeah, I'll turn the time over to you, sir, and we'll monitor the chat for any questions.
Great, thank you, Patrick. Let me share my screen, and I certainly will try to use your time wisely, and I won't drone on. But I do have, okay, let's see. Can you see that, Patrick?
Yes, sir. That is showing up. It's
Is it showing up as a full screen or not?
not as the full screen. Let's see.
Let's try it now.
It was showing up as, it did have the slides, but it also had the slide progression arrows with it, and not just the slide itself.
Yeah, okay.
I'm not entirely sure how to make sure that happens, but if we're able to, it'd be good to do it that way. My presentation may have been like that and I didn't realize it, so apologies.
Is that now the full screen or still the same thing?
It's still the same. I mean, you
Okay.
you do have the slide showing, but it might be, the text might end up being a little bit smaller.
Yeah. Display settings. There you go.
Okay, now you have it. That's perfect.
Great. Great. Okay, again, I'm Dale Frost, Fiscal Policy Analyst for the board. If you have questions related to appropriations and budgets, you can send them my way and I will try my very best to answer them. I'm going to quickly go over some very high level numbers and provide an overview of the state's budget for education. And then I think even more meaningfully, I'm going to show you where to get the information yourself so you can answer your own questions. That'll be my next presentation. All right. Great. So there are two organizations in addition to USBE that you should have in mind when you're dealing with budget related stuff. The Legislative Fiscal Analyst Office, they are the budgetary staff for the legislature, and the Governor's Office of Management and Budget, they are the budgetary staff for the governor. So the governor has the first major step in the budget process. Agencies submit budget requests and budget information to GOMB, and in December, usually, the governor comes out with budget recommendations. So this is kind of an overview of how a normal budgeting process works legislatively. After the governor's budget, there's a base bill that has the ongoing appropriations from the prior year and one-time funds taken out. And then anything above that is what's usually discussed in detail during the budget process. And that comes in two bills, usually a public ed budget amendments bill and a bill of bills. As you know, this has not been a normal year and it feels like a never-ending session. This is kind of a graphic to kind of get at, to show you what's happened for this budget year. So we had our normal three bills, House Bill 1, Senate Bill 2, House Bill 3, but then we also had a number of special sessions to try to deal with the revenue impacts due to COVID-19. And I have outlined a few of those bills. So that makes it complicated to answer sometimes questions on what was appropriated for X, Y, and Z as of what time. So when we're talking about it now, it takes into account all of these additional bills that impact the prior budgetary bills. So one of the key pieces of information I'll go through in a little more detail is this report from the LFA called the Appropriations Report. And what the Appropriations Report this year includes is not only the 2020 general session, but all the special sessions through the 5th special session. And so there's one special session not included in that, but that's only a few minor changes to the budget. I'll quickly go over funding and where the money comes from, and then where it goes to. So I don't even know. Okay, so there's about $7 billion in revenues reported to local education agencies on their annual financial reports. The biggest piece by far is state revenues, and those are primarily income taxes. The next biggest piece are local revenues, and those are property taxes. And then a smaller portion is federal revenues. So this is on the expenditure side. The vast majority of funds are used for salaries and benefits of teachers and staff and LEAs. I also want to show you that 97% of the appropriated budgets for the state are passed through to local education agencies. Only 3% is spent at the U.S. State Board of Ed level. All right, so this gives you a picture of where funding has gone. Overall funds has increased from about $4.5 million to about, or billion, excuse me, to about $6 billion over the last 5 years. I'm going to go into a little more detail on the biggest part of the education budget, which is the minimum school program. And we've kind of already heard a lot about that. You remember above the line, below the line, those sorts of terms that you hear. I'll show you in a little more detail what that means. So these next tables come from the appropriations report. And so you can see this is where it shows clearly what the WPU value for 2020 and 2021 are, fiscal 2020 and fiscal 2021, the basic tax rate. As you can see on the education fund, which is income taxes. And then the next biggest part comes from property taxes, about $557 million. So here's the spending side of that. We've talked a lot today about WPUs and how they're calculated and allocated. This is the dollar amount. This is where you see these WPUs in action. So of the $3.2 billion appropriated through the basic school program, the vast majority, $2.2 billion, goes through the grades 1 through 12 program. The first category under the basic school program, these regular basic school programs, these are more dollars that are generally unrestricted. And then the restricted basic school programs are primarily special education, but also CTE and class size reductions programs. And they are more restricted in their use of funds. So you can see here, the line really refers to the difference between the basic school program, this green table, and the next two programs, the related to basic and then the vote and board local levy programs. So the related to basic programs all come from state revenues, and they are more categorical and more restricted in their use of funds. You heard Jake Houtrow mention the charter school local replacement rate. There's the $25.62 per student right there in that information. And $920 million was allocated to the related to basic. And there are 4 basic categories for the related to basic. Kind of a general category. And the biggest here is the charter school local replacement that is intended to replace local revenues that charters do not levy property taxes. But then the next 3 are categories are focused populations. These are things like EARS, which is for at-risk students or accelerated students, or OEK, which is early intervention. A lot of these things are on your allotment memos. So now you can see the overall picture and how much is appropriated statewide and what were the changes in those sort of things. The second two the third and fourth categories are educator supports. The vast majority of that funding is for the educator salary adjustment. And second is the statewide initiatives. And these are things like TSSP, dual immersion, Beverly Taylor, and we had mentioned already the MOSE program. It's right there on number 7. So again, I'm not getting into any more detail unless there's specific questions, but it can kind of give you an idea of what goes into the major parts of the state budget. And then charter schools don't receive this part, but this is the vote and board local levy programs, which are guarantees of certain revenues if districts levy certain property taxes. So I know there's a very high level of kind of some of the big dollar amounts going to education, but and so I will now move on and show you kind of where you can get your own legislative and budgetary information to answer your questions. And if you have specific questions, feel free to reach out to me. Patrick, are there any questions at this time?
Just one comment, no questions at this point. Yeah.
Okay, great. So then let me bring up the other. Okay, let me put this over here. All right, I need to share this other presentation. Okay, and I'll full screen that. And then, all right. So I'm going to quickly go through some of the major places that you can find state level information on education appropriations and the changes to them. And then I'll kind of go through a couple examples online so you can see that. So if there's one thing for you all to remember, it's if you have a budget related question to go to budget.utah.gov. I actually think it's a really good resource here. And this is both on the revenue side and the expenditure side of the state budget in general, including education related appropriations. So these are some of the major products. The first one I'm going to go into a little more detail on is the Compendium of Budget Information. I call it the COBE. And the full budget of the state of Utah is that appropriations report. And then I will spend a little time going over appropriations bills and kind of how you read them. So the COBE, when you click on this, this is what the COBE looks like. You'll have, and if you're trying to find information on education, public ed, you need to navigate using that navigate bar at the top. And the COBE is organized as the budget is through these subcommittees. The public education subcommittee is the one that you'll probably want to look at. And then you'll need to drill down from there. I've already talked about the minimum school program and these 3 programs within it. So once you get to a program, so like let's say we're looking at grades 1 through 12, then you can look at issues, which means changes from last year to this year. Background is background information of the last 5 years and financial information. It's all very helpful depending on what your questions are. And I'll kind of go through an example so you can kind of see that in more detail. So this is the appropriations report. It's about 650 pages long. And so you'll want to focus on the 7th section, which relates to public ed. It goes over all the changes and some of the demographic information of the public ed system, and then goes over changes. And that's where these tables are that I showed you, as well as a lot of good narrative and a lot of good information if you want to drill down on what really happened with the budget. So I will quickly go through how to read a bill, and then I'll go through a couple examples online. How much time do I have left, Patrick? Do I have 5 minutes?
No, you're doing just fine. You know, you could take another 15 minutes if that works for you.
Okay, I'll spend maybe 10 minutes or so. So
That'd be great.
this is the legislature's website again, which and I'll show you how to navigate it. If you click bills, this drop-down menu comes forward, and then you'll want to click either view bills or 2020 bills if you're looking for last session. If you click view bills, it will show you each of the sessions from that happened during the year. You'll see that in 2020, there was the general session, but then there were also 4 special sessions. And whenever you see a bill that is in the thousands, so like if you saw that one of the budget bills that impacted us was House Bill 5012, you'd have to click on the 5th special session link and go to House Bill 512. Once you get to a specific session, then they're organized numerically. And then you need to click on a bill. So like, let's say we clicked on House Bill 512, you'll see who the sponsors are. You'll see the legislative language. Another important piece, so read through the highlighted provisions, which will give you a sense of what the bill does. And another important link is this fiscal note on the right-hand side. That will quantify what the Legislative Fiscal Analyst Office, LFA, thinks that bill will cost. Here's an example. Here's the picture of that fiscal note. And then the last thing I'll say on legislation, there's a lot that I could go into here, but very basically, when you're changing statute, if you're removing existing statute, you strike out the language. If you're adding it, it's underlined. And when there's new language, either intent language, well, when there's new changes to statute, it's under a section typically. And when there's a change to appropriations, you'll see it item 1 on page 580 or line 581. Those are the appropriation changes. So often I will say you will find, your appropriation for that program in Senate Bill 2, item 12 sort of thing. And then you can know where to find it. So let me go and show you what this looks like when you're actually navigating the website. So let me share my screen and go over here. Nope. Okay. Bring this over here. Does that look okay? Can you see that, Patrick?
Dale, we can't at the moment. It's just like a.
Okay.
Okay, now it's showing up. Okay, now you're.
Okay, good. Thank you. Sometimes it's just hard to see what you're seeing. Okay. Here's budget.utah.gov. I showed you before, if you can click bills, you click view bills here. If it will let me. Come on. Is it being difficult? Okay, well, that's working. I'm not sure on that. It should work. View bills. All right. And so then, just use an example. To find House Bill 512, you go House bills, then you expand that out. And here's the public education amendments. And these were a lot of the changes due to COVID. As an example, you can go through this bill or whatever bill you're looking for. So one of the other things I said was the COBE right here. So this is what the COBE looks like. So this is the COBE from last year, because this year's legislative session hasn't occurred yet, or this year. Next year's legislative session, the 2021 session, but you have to go back to the prior year to see what happened in the prior budget. So like, let's say, for example, I wanted to see what happened to the charter school administration funds. So you'll click public education, right? Minimum school program. You do have to kind of know where that program is. Sometimes if you don't know it, what you can do, for example, is you can go to the summary. And often I will go through issues, and this shows you all of the issues, positive or negative, the changes that were made to the budgets. You can see there's a whole bunch of them. I know that the charter school administration budget was cut, and it was a fairly large program. And you can see right here, LEA administrative costs. S5 means it was in the 5th special session, that bill that I showed you that eliminated this program. Now, $13 million includes both districts and charter schools, but you can see down here, there's 2 programs. And the charter school administration program is actually part of the Related to Basics. So if you click on that, it will show you that what really happened for charter schools, if I can, oh, right here, was that it was an $8 million cut, $8,014,500. And so, and if you want to see the financials on that, you'll see here that that this appropriation was cut. There's just a non-lapsing balance left. So there's no funds in that. And that was, you know, Scott was kind of alluding to that cut on both the district side and the charter side really did hurt a lot of LEAs. If you wanted to find, so that's kind of generally how you use the COBE. The COBE is the first place I look if I want to drill down and get more information. If I don't know where something is, though, that's where I'll go to the appropriations report, or if I just need to search something generally. So here you click, I went back to budget.utah.gov, and here's the appropriations report. And let's say I wanted to find out what happened to charter school local replacement, okay? So a good way, if you don't know where to look, is that I just search for the term. Okay, so right here is a narrative of what happened to charter school local replacement. And they'll talk about how that went from a per student amount 2,355 to 2,562, and it adds $14.3 million in costs. And that rate was based on the 2019 school district revenue collections. Another place to see more data on that is that it is the line. Yeah, so here's the table that I was talking to you about. And the charter school local replacement here is right here on this line. And you can see that there was $10 million added between 20 and 21 in that program, but there was the $8 million reduced from charter school administrative costs. So overall, that portion of the Related to Basic program increased by about $1 million once it was netted out. So hopefully that can give you an idea of kind of how to utilize this. There's a lot here. And if you have specific questions, you can always reach out to me. But hopefully that can start to give you some of the tools, we stopped sharing, that you might need to answer your own questions when it comes to budgets and appropriations. So that's all that I have, Patrick. I would be happy to answer any questions.
Dale, it looks like you did an amazing job, sir. There's no questions at this point in the chat. So appreciate your presentation. Thank you. One thing I will say in relation to what Dale does, Dale works on coordinating the fiscal notes and the fiscal note responses by the State Board of Education to the legislature. The school finance team does participate in that with some of our fiscal monitors. We'll be kind of spreading that out, but you might hear from us at times if there is a charter related bill, because we do look at not only an agency impact, but also local impacts. As I'm sure you're all aware, that's most often where the impacts occur. And so you might hear from us, you might hear from Dale, getting feedback to incorporate into some of the fiscal note responses that we prepare for the legislative session. Usually a tight turnaround time on those, but just thought I'd give a heads up. Dale, it does look like there is a quick question here from Kent Brown. So in Dale's specific example of the 13 million cut to both districts and charters were cut 8 million and districts were cut 5 million.
That is correct. One of the reasons why the amount for charters was larger is because all of the districts that have more than 5,000 students didn't have any administration funds. It was only for the very smallest charters. And so if you look on a per student amount, there was more in the charter sector than in the district side. But you're right that that dollar amount was larger on the charter side.
And that is something that we are in process of discussing with a few of you key business officials with the charters, looking at possibilities of bringing that to the legislative analysts, seeing what adjustments might possibly be able to be made there. Of course, that's something that we'll bring up more as the legislative session gets closer, which I guess that's barely a month and a half away. But that is a very good question with what happened there. There was some increase in the local replacement funding. Dale may have mentioned that, which in a way offsets it, but it depends on the distribution. So it could have negatively affected one school while it positively affected another, depending on the program and the distribution. Great question. Okay, we'd like to continue on with our agenda. Next on the agenda is Kathleen Britton and Kimberly Loveland with the Child Nutrition Program, Financial Management and Updates. So Kathleen, we'll turn the time over to you guys.
All right. Thanks, Patrick. Those of you who don't know me, I'm Kathleen Britton, and I'm the director over the Child Nutrition Programs. And I have with me Kim Loveland, who is the coordinator over the school section of the programs. I'm going to share my screen now with you guys. Can you see that now? Patrick?
Yeah, that's affirmative, and we can see that slides all up.
Okay, great. So we're just going to give you a pretty high level overview of child nutrition programs, and more information if you have after this, you can reach out to us or look on Canvas from our website. It'll show you where you can find some more information. Child Nutrition Programs is a federal regulated program, and we run through the Department of USDA, not the Department of Education. So it's USDA and FNS, which is Food and Nutrition Services. There are federal regulations and policy and guidance apply to these programs. So as you can see here, these are the codes of the federal regulations for future reference of all the 14 programs we oversee at the agency here in USBE. So if an LEA or a charter determines that they would like to participate in one of our programs, they do have to fill out a permanent agreement. And this permanent agreement states that they will follow these regulations and policies, and that the school food service department manages the meal services for schools within the LEA. It is up to the LEA to implement internal controls and standard operating procedures and maintain good program documentation to support the claim for reimbursement and grant funding. It is also the LEA's responsibility to ensure reports are accurate and submitted timely. So when you sign off on this permanent agreement, that is what they're signing off on. The LEA may not give signature authority for the agreement, reports or claims to contractors, vendors, or food service management companies. They are still ultimately responsible for all of these regulations. The state office uses an online system called the CNP Web that helps track and approve our sponsors, and also allows you to submit your claims every month. And that is how the payment flows through, and I'll go over that later. Some of the regulations and policies that also have an LEA is responsible for is the financial operations, as we just talked about, standard professional hiring procedures, unpaid meal policy, and a local wellness policy and smart snacks in schools. As we've all known, COVID here has thrown a little twist in our programs, and especially our federal programs. And child nutrition programs have become the forefront in helping feed children. On this slide, you'll just see how all of this progressed over the last 9 months and how we've gotten to the point we are at right now, where you can apply for waivers and all students are fed for free. If you have any questions on this, please reach out to us. Next, I'm going to go over a little briefly on the funding of child nutrition programs, all the federal, state, and local revenues, and how these payments are solely for the nonprofit food service program, and they are restricted funding. So therefore, once this funding comes into your program, it is restricted only for child nutrition and no other programs are allowed to use it. So how are CNP programs funded? Well, as you can see, our meals, it is basically a meal reimbursement. So the funding comes down from Congress of what the meal rate would be. And every year they change that, and it is posted as we have on the link here. And then the federal reimbursement funding formulas are already determined by the meals times the rate. And then if you're a school that has special provision or CEP, which are your higher low-income areas, there's a higher rate for them. And then for your seamless summer, which everybody is participating in currently, all meals are served are free. On top of the funding that we receive from the federal government for our meals, there's also state reimbursement, and that is your liquor tax reimbursement that is also based on meals. So it's really clear to let you know the only funding that a school will receive or a district is the funding of the meals claimed. There's no other funding except for what meals are served. So how does the funding flow to the LEAs? As I was just saying, the funding is based on the program site, and it is authorized after we have approved it in the application of the meals served, the reimbursable meals or snacks served for each child. So there is procedures and regulations that must be followed by your food service department to determine whether that meal is eligible. Those meals then are calculated according to daily meals after they are served for the students. And then monthly, these claims are sent down and filled out into the CNP web software program that is linked to ours from your districts. And then a payment then is sent to the LEAs through the monthly allotment. This is always a month behind. So for instance, we'll receive November claims that we pay out the end of December. Does anybody have any questions at this point before I move on a little bit more?
Kathleen, I'm not seeing, let me double check here. You may have brought this up, but there is a question. Is the liquor tax set at a specific rate per meal? What is it and does it change?
Yes and yes. The liquor tax, we receive 10% of liquor tax revenue every year. So therefore it does fluctuate with how the liquor tax sales are. We set a set rate to begin the school year, and then we reevaluate that come January. We do it twice a year, in January and then again in April, and then we do a final closeout at the end of the year. So currently it is set at 70 cents a meal. So the more meals you serve, the more liquor tax you receive, and also the more federal funds you receive. Any other questions?
I think that answered it. That's it for the moment.
Okay. So this slide here just kind of goes over the monthly allotment memo, and where you would see it on your monthly allotment, it would be under your the block. And those are the number, the CIDA numbers that you would be able to see under your monthly allotment. It breaks out your free and reduced, your paid, and your breakfast, after-school snack programs, or special milk programs. Then there'll be a separate line item for the liquor tax revenue that you will receive also on your monthly allotment. So make sure your food service director and should be matching that up with what our system says that they receive. And we are all normal, so we ask that everybody checks that to make sure the accuracy is there, and we catch if there's been an issue sooner than later. Some other ways there's revenue that you can take into your schools is the equipment grant and the fresh fruit and vegetable grant. The equipment grant, I'm sorry, let me go back. The equipment grant is offered will be sent out again this year. And we'll talk a little bit more about that later. And the fresh fruit and vegetable grant is a grant that you have to apply for every year also. And it's for elementary schools that have 50% or higher free and reduced. There's also the USDA foods that schools can use to help subsidize the cost of their meals. And we encourage that people don't leave money on the table. This money is determined by the amount of meals. It is a percentage of your meals that you serve. That is the amount of money that your district gets, that they get to purchase food that then comes into their districts to use for their meals. This program has a lot of training. We have a lot of training on it, especially for new directors, because it is a great way to lower the cost of your meals, but it's also one that can be very confusing to many, and they leave money on the table. So we definitely ask for the food service people to reach out to us, take our trainings, and use these fundings so that we don't have to send it back, or some other district doesn't end up using money that is meant for you. Like I mentioned, some other CMP grants that can help with funding is our fresh fruit and vegetable and our equipment grant. The new equipment grant is coming out soon, so you should be able to you'll get an email, and this also goes through the Gov grant system. So please look out for that. And Chris Bruin will be sending emails out about that. And then our fresh fruit and vegetable program grants that I've mentioned are for the elementary schools up to 6th grade. And Kate Wheeler is our specialist in the office that will be sending money out for that also. And it comes in 2 allotments that have to be spent, and we'd be working with your directors as best as possible to make sure that they keep on track with spending their funds. There's tracking sheets that we send out to them, and everything possible we try to help to make sure that you use these funds accurately. Does anybody have any other questions on the grants right now?
Not at the moment.
Okay, then I'm going to pass it over to Kim, and she's going to talk about the maintenance of the nonprofit food service accounts. Kim, do you want to step in now?
Sure thing. Hi, my name is Kim Bellman, coordinator with the school programs. We'll go over just a few of the key areas that are part of the maintenance of the nonprofit food service accounts, part of the administrative review. Kathleen, next slide, please. So those 5 key areas are maintenance of the nonprofit school food service account, just making sure that all revenues and expenditures associated with that account are meeting the federal requirements for that, and that it stays in a nonprofit status as defined in regulations. Net cash resources, that's part of that piece as well. Some of you may know that as 3 months excess. And so just making sure that revenues aren't too exorbitant with the nonprofit food service account. And then you've got your paid lunch equity, revenue from non-program foods, which would be like a la carte, catering, adult meals, and then we'll touch on indirect costs. So the first thing is nonprofit food service account. The account is designed to be self-sustaining with the revenues, federal, state, and local revenues for the program to operate. The nonprofit food service account also needs to operate separately from other LEA budgets. So you want to kind of think of that as its own separate business within your charter. Also, you want to make sure that funding is only used for a defined purpose and that any revenue must be maintained in that nonprofit school food service account. And then with all federal revenues and grants, you want to make sure that all of those expenses are allowable, allocable, and necessary. For example, your equipment, labor, food, and making sure that all that's properly documented and reported correctly. So this slide has a breakdown of the reduced price student meals and the maximums that can be charged for those eligible students. You see 30 cents for breakfast, 40 cents for lunch, and 15 cents if you're on the National School Lunch After School Snack Program. If the LEA would like to, they can always charge less than that, and they cannot charge for reduced price student meals. With Seamless Summer going on right now, no one's charging any of the students, but that is an option to remove the reduced price charges. And then the full paid student meal pricing structure, that obviously needs to generate enough revenue to make up the difference from what you're receiving in state and federal funding. But then there's also the USDA requirement for the paid lunch equity tool. And so that tool is provided by USDA every year. Kate Wheeler in our office is the primary contact for that. Not quite sure how we're going to do that with the next school year. We generally use the October claim data and the paid lunch prices to do the calculations in that tool. And a lot of our districts and charter schools will not have that data. So more to come on that tool for next year. But basically it does a calculation based on the number of meals served and prices charged to get an estimate to make sure that there's enough being charged for those meals to cover the difference, or that there's a non-federal fund source associated with that. And Kate works with everybody on a one-to-one basis in doing that. Your non-reimbursable meals, obviously they're not getting any federal or state reimbursements. So that'd be any a la carte sales, your adult meal sales or visitor sales, and that would also include catering. And so the revenue from that needs to cover the cost of producing those a la carte items or those individual meals. Just a few guiding principles for allowable costs. We look to the 2 CFR 200s for that. Again, necessary, reasonable, allocable, and making sure that those expenditures are compliant with current regulations, policies, and procedures, and that gap is being followed as well with all of that. Oh, you're okay. Go ahead. So I want to touch on the equipment approval process. So a couple of years ago, USDA sent out a policy memo notifying states that they could come up with a pre-approved equipment list. So our state did that, put a list of equipment that we thought would be commonly used within the food service program, send that back to our regional office. They approved it. So we do have that list on our Canvas website, State Forms and Resources, and that link was shared in the handout that was provided with the PowerPoint. So you can refer to that. So if you are needing to purchase equipment for the food service program, and it's on that list, you're good to go. Go ahead and follow with your procurement process in obtaining that equipment. If that equipment is on the list and it's over $25,000, our office still needs to review that for approval. And if there's a piece of equipment that is not on the list, there is a request form that you can fill out. That will be received by Chris Bruin in our office. He'll review it. If there's any questions, he'll follow up with you on that. But we do have some flexibility in approving some additional equipment. On occasion, we might have to reach out to our regional office for approval on that. But I just wanted you to be aware of what that process looks like, because a lot of times we get questions on that. So here's some just general guidelines for unallowable costs. One thing you want to think about with expenditures is that the charter or the district or the private school on the LEA level, they're responsible to house the food service program. And so program funds cannot be used to purchase land, buildings, or to construct buildings. If there's different things that need to happen with construction, a lot of times that will need to be run through us, and we might have to reach out to USDA for approval on that. But generally, those things are not allowable costs to our program. Obviously, any bad debt that's accrued, specifically to student meal accounts not being paid up, once that's termed as bad debt, that's not allowable to use program funds to cover that cost. We just talked about the equipment, so you want to make sure you go through the appropriate line of approval for that. And then anything that's not procured and documented correctly is also an unallowable cost to the program. Okay, net cash resources is one of the other key areas that we look at and provide training on. So again, that's that 3-month net cash. And you'll want to make sure that you are working with your school food service director or manager on that, at least annually, to monitor that. If you can do that more frequently, that's great. Just kind of keep a pulse on where that is. So you'll want to make sure that the ending fund balance is not greater than 3 months operating expenses. And so to calculate that, you'll divide the school food authority's total food service operating expenses. And generally they're running on a 9-month period. So you'll divide that by 9 to get a monthly expense and multiply that by 3. And that will give you your 3-month average expenses. And so if your account is over that amount, you'll want to come up with a spend down plan. And our office goes through the financial reports that are submitted in UPIFs, and we do those calculations on an annual basis. So you might be hearing from us if, when we're looking at closed out fiscal years, if those amounts are calculating out higher, we'll reach out to you for a spend down plan. And some of those spend down plans could include reducing the reduced price charge for students. It could involve improving food quality or the nonprofit school food service operations. It could be used to set up goals and objectives to help increase participation in the programs. And then it can always be used for equipment purchases as well. So just be aware of that and make sure you kind of put that on your at least an annual to-do list to go through and calculate that.
Hi, Kimberly. We do have a question in the chat. I don't know if this might be on the slide before, but the question is, what about walk-in fridge or freezer in the buildings?
So we do have freezers and refrigerators listed on the pre-approval equipment list. Again, if it's going to be over $200,000 or $25,000, you'll want to reach out to our office. And we'll go over kind of what that looks like and what your plan is for approval. Hopefully that answered the question. Great, thank you. Okay, talked about the paid lunch equity tool just a little bit. There's the regulation that's tied to that requirement. Like I said before, we use the USDA tool for that, and we're waiting to get guidance for school year 22 on how those calculations will be completed. If for some reason the calculations show that a price increase is needed, Kate will work with your charter school on determining the best route for that. And the most you have to increase prices in a given year is 10 cents. So there's that. And then you also get state reimbursement for some of that as well. So look for more information this coming spring from Kate Wheeler on that. So again, non-program foods or any catering, a la carte, adult food sales. So it's anything that is not receiving reimbursement. And so that will need to be covered with non-program funds or local revenues to recover the cost of obtaining, preparing, and selling those foods. So basically, they don't want the federal and state reimbursement subsidizing any of that stuff, which makes sense. So all foods that are sold in the school or part of the school food service that are purchased with nonprofit school food service accounts would be impacted by this regulation. And there'll need to be a reference period that's determined. The policy states that at least 5 consecutive operating days is the minimum amount to use for a reference period. And part of that, it will be costing out all of your non-program food costs, figuring out your non-program food revenues, any program revenue, and your reimbursable meal costs. So there's 4 key pieces of information that you would need to fill out the tool. We do have a tool and instruction sheet available on our Canvas website. So it's a great resource to use for that. The one thing with this is making sure that you're doing it annually, again, for a minimum of 5 days reference period. And then you'll also want to keep all the documentation that you used to do those calculations. The reviewers will be asking for that. And that is a common finding, is not having the documentation to support the calculations or not doing it all. So you want to make sure you have that on your to-do list. As far as indirect costs go, for our program specifically, you have direct costs, and then you have indirect costs, which may include expenses attributed to your accounting, payroll, purchasing, utilities, that type of a thing. So it is up to the LEA to determine if they will be charging indirect costs or not. There is a link to the indirect cost guidance specific to our programs. For child nutrition programs, you'll be using the unrestricted rates, and those are all posted on the financial operations website. We will be looking at those as part of the administrative review. A lot of things that come up as findings is that some LEAs have used the wrong rate, or maybe they didn't have an approved rate with financial operations. The calculation might have been done incorrectly. There might have been more than the maximum amount charged, or 2 similar expenses were charged as a direct and an indirect cost rate, which would be double dipping. So you'll just want to be careful of that. The calculation that we use to determine the maximum amount that could be charged for indirect costs to the nonprofit school food service account is on this slide for your reference. So by this point in time, every LEA that has an agreement with our office should have an unpaid meal charge policy. That was instituted July 1st of 2017. And the policy must address situations where children participating at the reduced price or paid rate that do not have money to cover the cost of a meal at the time of meal service. And so that policy will be specific to your local circumstances and available resources. It might not hurt to review that once in a while. You'll want to make sure to provide training to your key staff on implementation of the policy to make sure that that is clear and consistent in how that's being applied. You'll also want to obtain input and buy-in from the school community and clearly communicate the policy to households. So some best practices that we encourage schools to do would be to make sure that the free and reduced price application is available through the school year. Obviously, it's not a typical school year this year, but when the National School Lunch and Breakfast programs start up again, you'll want to make sure that those are available. And when you have new households or newly registered students, those students should always have access to an application when they register. And then it's also important to provide application materials in the primary language of the household and provide any assistance that might be needed with that process. And we have templates and translations available with that. And then we also work with the food service directors to conduct what we call direct certification. And we have agreements in place with Department of Workforce Services and Department of Health and Human Services to identify students that are participating in certain state programs. You've got the SNAP program, there's specific Medicaid programs that we have a pilot with USDA right now to qualify those students without a free reduced price application. So we encourage LEAs and school food service staff to do that as frequently as possible. So for procurement, we just want to touch on that really quick. You'll want to make sure you're following the most restrictive principles, whether those are federal, state, or local. And the small purchase threshold that we have right now is $50,000 for the state. If your LEA has a more restrictive threshold, you would follow that. Every LEA should have a written procurement policy, codes of conduct, and those will outline when a formal bid and an informal bid would be put into place for different expenditures. So with that piece, as far as contract management and document management of your procurement, you'll want to make sure that all information and documentation supporting the final decision on approving a bid are retained. And we have specific procurement requirements for the National School Lunch and Breakfast programs under the applicable 7 CFR 210 and 220, if you want to refer to those. We also have a great variety of resources, particularly to procurement. We're continuing to work and build our library up on that. Those are posted on Canvas. You can reach out to your assigned CMP specialist if you have questions. Our procurement guru right now in the office is Christopher Bruin, which some of you might have worked with as part of the procurement review. But we'd rather have you guys reach out with questions or request training specifically to procurement than have to come in after the fact and find out that maybe things weren't as neat and tidy as they should have been, specific for our programs. Okay, monitoring. We'll go over just really briefly what that looks like. Next slide, please. So from the local level, there are specific monitoring requirements. Obviously, with this being a federal program, there's training and monitoring oversight for your civil rights policies and procedures. Some of you may be supervising the child nutrition programs. And so you'll want to make sure that that is being followed and adhered to. We have a really comprehensive civil rights training on our Canvas webpage. There's also annual monitoring reviews that are specific to the various programs. So there's site monitoring forms and reviews that need to happen for the lunch and breakfast programs by February 1st. And then currently for Seamless Summer, those will need to be completed by June 30th. And so your directors should be aware of that and those timelines for that. Also, we've talked about those 5 key areas in resource management. It's really the LEA's responsibility to make sure that they are upholding the part of their agreement with our office specific to those key areas. If you have questions on that, please reach out to us on how to do that. You'll also be involved with the procurement and contract management in a lot of cases. And we have a lot of times include the financial contact that we have in CMP Web for our procurement reviews. And we have to do separate food service management company reviews. We have a couple charter schools that currently have contracts with them right now. So you'll be part of those 3 review processes for sure. And we're try really hard to send out notification way in advance and provide you guys the training and the resources you need to have a good review. On the state side of things, obviously we have an agreement with USDA, and so we have to uphold our agreement with them. And part of that is a state monitoring plan, which includes administrative reviews. We look at the student eligibility, meal counting and claiming, menus to ensure that what was claimed for reimbursement was accurate and met the regulatory requirements for that. We look at resource management in general areas, which you may or may not be over for civil rights, local wellness policies. If you're involved with the hiring for the food service director, and if you're involved with any vending or fundraising that involves food within the LEA. And then obviously we have the procurement review. Right now we're on a 6-year review cycle for that. We're on a 5-year review cycle for the administrative review. And then the food service management reviews have to happen the first year of the contract and then every 3 years, just to give you some timelines for that.
Kimberly, there is a question. You may have gotten this one, maybe not, but the question is, you mentioned there's an approved list of equipment on your Canvas course. Are any of these items on state contract for purchasing?
They may or may not. I have not looked at that list, but if that's an option that you have to go through for any items on state contract, we would recommend that you go ahead and do that. Just make sure that they're on the list and then just go through your procurement process for that. And I can post the link to our Canvas course in the chat too, just so that you guys have that as a reference. And Chris Bruin used to work up in state procurement office too. So he's a really good resource if you have questions on any specific equipment purchases. He's more than happy to help with any of that. Was that all of the questions, Patrick?
I believe so. Yeah, that's all that I see for now.
Okay, great. Again, with anything program related, you'll want to make sure that you have appropriate internal controls in place. Just making sure that, you know, the money coming in and being accounted for is done to help reduce risk. All staff, you'll want to make sure they're trained on the policies and procedures of allowable costs. It's a little bit harder for separation of duties with a smaller entity, but you'll want to kind of look at that process and see what you can do to put in place to make sure that that's clearly delineated from the time money is received to, you know, getting deposited and getting reported. And then you'll want to make sure that there's physical controls in place to prevent any theft or loss with any petty cash or anything like that. So those are just quick reminders on internal controls. A couple highlights with reporting. Next slide, please. So here's a list of SFA director, and you might be part of that process too, but just making sure that all the documentation for financial transactions are being maintained. Kathleen mentioned at the first of the training how that process works for claims for reimbursement. And so your food service directors and other authorized users to the CMP web system have access to claim summaries for each month. They have access to payments that were calculated in the CMP web system. And again, tying that back to your allotment memos and for the block grants and for independent grants that we provide through our programs. And then the October survey, we are working on that right now. We just got all of the final responses a couple of weeks ago. So we'll be going through that but a lot of funding or program expansion through child nutrition programs is based off the free and reduced percentages. So for example, if you have a site that's 50% free and reduced, based off the October survey, your school would be able to provide a national school lunch program, after school snack at the free rate. So you wouldn't charge any of the kids for that. In typical circumstances, you would also qualify for like a seamless summer program or the regular summer program. So there's a lot of grants and things within CMP and outside of CMP that rely on that specific data. It'll be interesting to see how the numbers turn out, just because we had a very short time frame for this year for the schools to collect free and reduced price applications before switching to seamless summer. So there might be some more guidance sent out on that in the next month or two. And then from the business administrator side, you've got your AFR and APR, which a lot of you are probably familiar with already. Again, good data in, good data out. So just making sure that those reports are submitted accurately for a lot of the stuff that we've already talked about today. And then those of you, next slide, please. For those of you with charter schools that currently are not participating in the National School Lunch Program or Breakfast Program, if you are interested in starting that up, our contact in our office is Janley Smith. There is an application of intent that is due February 15th that is posted on the USBE Child Nutrition Programs. If you want more information on that, you can contact Kathleen Britton, myself, or Janley, and we can get you that. And then we have our Canvas courses that we're continuing to build. We have what we call NSLP Central for school meal programs. And then we have a food distribution FDP Central that houses all of the information that you would need for USD foods. And through that Canvas, we have a personalized training request that you can submit to our office, and we can get you set up with a specialist that will provide customized training for you and your staff. So just wanted to make sure that you guys knew that that was available to you. And that covers what we've got for CMP today. Thank you.
Thank you, Kim. That's all we have, Patrick.
Okay, I appreciate that. I don't think we have any other questions in the chat. Just do a quick double check there. Yeah, that should be good. Appreciate you guys' presentation. That was very helpful and a lot of great information. Obviously, for everyone, if you have any follow-up questions, feel free to get in touch with any of the child nutrition folks, and they can help you on that as well. There is a link that Kim provided to CMP Canvas. If you haven't seen that in the chat, you can take a look. Okay, we'll keep on keeping on. Our next presenter is Sarah Young on the CARES funding update. I think we could definitely say she cares. It's my best joke so far today. I'm just not with it, I'm sorry. But I think you're gonna get a lot of great information on CARES funding and everything that's been going on with that. So Sarah, if you're ready, we can get the screen over to you.
Awesome. Thank you. I appreciate it. Nice to see all of you. Many of you I have met before, either through previous efforts at the office, such as digital teaching and learning, or maybe this summer when you were coming to pick up masks and thermometers and everything else. So if we haven't met in person, my name is Sarah Young. I'm our Director of Strategic Initiatives here at the State Board of Education. I am going to be talking to you today about CARES funding. So that is a lot of information. So I'm going to try and break it down into the sub pieces so that you have kind of the high level overview that you need related to the business administration side of this. So let's bring this on up. All right, here we go. So when people talk about K-12 CARES funding, I think it's important to note that there was a large piece of legislation known as CARES that was passed at the federal level, but there are actually a lot of subparts of particular programs that have different rules, restrictions. I think somebody's mic might be on. No worries. Okay. There's a lot of different sub-programs that fall underneath CARES, and that it's important to be able to differentiate between those because they each have kind of different expectations, different allowable use cases, different plans you would have submitted. And then as well, different timelines in which you need to spend the funding. So without further ado, I'm going to drop into each of these and kind of touch base on the different awards, their allowable use cases, and so on and so forth. So let's start with ESSER. So this is the Elementary and Secondary School Emergency Relief Award that came from the U.S. Department of Education. The majority of our funding, $61 million, was distributed to our local education agencies following the federal formula that was based on a Title I-A allocation from the previous school year. So this funding has been distributed through the Utah Grants Management System. Each LEA was required to submit a plan, and that plan had to fall within one of the 12 allowable use cases that were defined by the U.S. Department of Education. Because this is a federal grant, it is available for funding based on reimbursement to the local education agency once the expenses are made. So it's important to note for this one that funds are available to expend through September 30th, 2022. So in a moment, you're going to hear us pressuring you in regards to the need to spend funds and to get those reimbursements in. It's important to note that ESSER does not fall into that must spend category. You have time to be able to use these funds in alignment with your plans and or make adjustments to your plans based on the way you're going to use some of the more time sensitive funds. In addition to the main ESSER award, which was the $61 million, we also had part of our state set-aside base that was allocated to additional ESSER awards to LEAs that either had not received Title I funding and therefore weren't eligible for the first distribution, or who received such a small number that the state felt it was necessary in the State Board of Education to raise the amount of their award to a base level of at least $21,194 to make sure that every LEA, recognizing the impacts of COVID were across all of our institutions, had the opportunity to have resources related to ESSER to be able to address their needs. Within this space, we have 49 additional awards that may be approved. So your LEA may fall into one of three categories. One is having a 90% ESSER award, and that's it. You might have a 10% base ESSER award, and that's it. Or you might have a 90% and a 10% to be able to get you to that funding floor of $21,194. Again, these have been awarded through the Utah Grants Management System, similar to ESSER, are available on a reimbursement basis in terms of submitting receipts and then receiving that funding on your next monthly allotment. Similarly to before, these funds are also available to expense through September 30th of 2022. So not in the time sensitive category compared to some of the ones we will touch on today. The GEAR Award. All right. This one is the Governor's Emergency Education Relief Fund. So in the state of Utah, we were fortunate in K-12 that the governor decided to allocate all of these funds to K-12. Although the allowable expenses could have been K through 16, they decided to focus on the needs in K-12 exclusively here in Utah. That means we awarded a little over $29 million in coordination with the governor's office to awards that were targeted at resources and supports for special education and at-risk student groups to address needs due to COVID-19. Similarly, all of our LEAs have applied for and been awarded these funds through the Utah Grants Management System, and those are now open and available for reimbursement through that particular system. Similar to ESSER, the expense date on this is September 30th, 2022. So again, when it comes to the GEAR awards, there's two key elements here. The first one being that it really has to go to resources, services, and or personnel that are specifically targeted towards meeting needs for special education and at-risk student groups. And second of all, recognizing that you have until September 30th, 2022 to expend these resources related to addressing those needs. All right, so now we get into the time-sensitive funding, which you should have been receiving emails pretty much regularly from me since October related to a lot of these opportunities through both grants management, and now you're going to be getting emails in terms of reminding you for reimbursement. So in August of 2020, near the end of the month, the Utah State Legislature approved House Bill 6002, which allowed for some of the state's coronavirus relief funding to be able to be used to specific K-12 needs. Those needs were articulated as follows: for K-12 personal protective equipment, for K-12 classroom supplies, enhancements, and equipment, and for K-12 broadband services. Now, recently, within the month of November, the state has also authorized some additional funds for the new high school testing grant that was released last week in regards to those LEAs that have high school sites that serve students in grades 10 through 12. I'm not going to get into a ton of details about the high school testing grant because it is new and we're still accepting applications at this time. But I will touch on each of the other ones because this money is getting set to expire. So we want to make sure you're clear on the potential use cases as well as the process for seeking reimbursement. So when we look at the timeline for the coronavirus relief funds, noting it was approved for K-12 on August 20th, the State Board of Education approved the distribution model to LEAs at the October board meeting, and then we released grants to the field the following week. All of our LEAs only had about 3 weeks to turn around those plans, so we tried to keep them as short and straightforward as possible in the Utah Grants Management System, because it is important to note that every LEA has to receive goods and services using these funds by December 30th of 2020. That is this month in a couple of weeks. So let's talk about what those awards look like. The first one's going to be the K-12 Personal Protective Equipment Grant. So this was $3.9 million that was authorized to the state because we spent about $1 million on statewide PPE. These would be the non-contact thermometers, disinfectant wipes, hand sanitizer stands, and hand sanitizer that you received in distributions from USBE. We had about $2.8 million that was left that was then distributed on a $5,000 base plus headcount based on the September 9th headcount distribution model. For each of the LEAs, you were asked to submit a plan in the grants management system talking about the personal protective equipment and or cleaning services that you needed due to COVID-19. A couple of items to note about PPE that are important. This money was authorized as of the March 13th emergency date. So if you have expenses related to PPE that are from March moving on forward that you have not sought reimbursement for through another program such as ESSER or GEAR, you would be able to use those previous expenses towards your overall grant award by December 30th of 2020 to free up other local funds. The other solution in that space would be to, once you received your award in October and moving forward, to have gone out and procured additional PPE or cleaning services to arrive before the December 30th date to be eligible to be used for reimbursement against this award. Let's move to the next category. We also have the K-12 Coronavirus Relief Fund grant. This is the CRF. In this particular award, $14.1 million was available for LEA grants. That was another $5,000 base plus distribution based on your September 9th headcounts. Specifically, the legislature stated that these supplies needed to be for classroom supplies, enhancements, and equipment needs due to COVID-19. So these would be items and just examples of things that we funded for many of the LEA plans. For classroom supplies, that would be looking at securing additional materials in the classroom so that students didn't have to share everybody share like 5 scissors across, but instead now we're going to have enough scissors so each child can have their own to reduce points of contact within the classroom. When it came to enhancements, many of our LEAs either looked at PPE style enhancements, looking at air filtration, additional signage, opportunities for plexiglass barriers related to social distancing, or enhancements related to audio enhancements. So things like microphones for teachers or additional speakers or cameras to be able to facilitate some of the new blended and remote learning opportunities. Last but not least is equipment. The biggest one that fell into this category was going to be securing Chromebooks and other personal devices for students and for teachers related to needs that have arisen due to COVID-19 and some of the remote and blended learning options. So there is a third category. It's a little bit smaller. We have a few charter schools that are within this space. The Utah State Board of Education also did a competitive grant back in August and early September to be able to provide broadband grant awards to students for the upcoming school year due to COVID-19. We had 41 LEAs awarded funds at a total of $5 million to the field. And this required for the prepayment of services and securing of devices such as hotspots by December 30th of 2020 this school year. This is projected to serve about 34,500 students. And if you are an LEA who is participating in this award or thinks, yeah, I'd like to participate in the future, I will note the K-12 broadband grant is one of the business cases that has been considered for prioritization by our State Board of Education for the upcoming legislative session. Staff at the agency are seeking another $5 million to be able to extend this particular award for one more school year while we work collectively with other state agencies to design a more comprehensive solution. I'll quickly show a graphic which demonstrates what that potential state solution could look like. We just note that providing broadband through K-12 addresses some of our households, but the need extends beyond those households that have students within our system to all of the households that don't have access to affordable internet currently. So right now we're working with the Governor's Office of Economic Development's broadband office, the Utah Education Telehealth Network, or UEN, who runs our backbone for infrastructure, Department of Workforce Services, and other agencies to develop solutions around how do we really make affordable internet something that isn't the responsibility of K-12, isn't the responsibility of Workforce Services, but is truly a commitment by the state of Utah. In addition to looking at solutions at the household level, such as subsidized solutions around Lifeline, we're also looking at opportunities for more collaboration across agencies so that everyone's not having to do their own thing. Specific learning opportunities related to our learners, because we understand that they're a really essential group that we need to target with resources, and then also broadband access opportunities for our tribal nations. We saw some really great initial steps right now in the fall with San Juan, but we noted that there's needs across multiple nations, and we really need to work with those local leaders to develop plans for that. All right, so here's where we stand to my business administrator friends. So I've gone through and listed the total award values that are available to the state and what have been awarded to the field. I have also noted the amount that was reimbursed as of November 19th. This was right before Thanksgiving and kind of the last big set of reimbursements that we received as an agency. And on the very far side, you can see then the percentages of the total award that has been requested for reimbursement. So I'm going to highlight these items down here in the green as the priority, because if we, whoops, let's go back. Hold on, going the wrong way. Everything that is down here in green in terms of K-12 PPE, K-12 CRF, K-12 broadband, and the San Juan Wi-Fi project, which is not anyone here, you will note that that money has to be spent with goods and services received by December 30th, 2020. That is in a couple of weeks. So in regards to normal timelines for awards and that we're able to push and change reimbursement dates, it is important to note that this date is in federal legislation. So the only way that date would change is if they come up with a compromise bill at the federal government and they get it approved by the fiscal due date of this upcoming Friday. So I don't know about you. I don't usually hang my hat on the fact that the federal government is going to find solutions in all of these time-sensitive cases. So it is very, very important that you're looking at each of these awards that are highlighted in green and considering, have we spent the money? And if we haven't, do we have a plan to by December 30th that allows us to have goods and services received by that time? These numbers on the side are really low. And when the funding date comes and ends and the reimbursement period ends, which is January 8th of 2021, that money gets returned to the federal government and is no longer available, not just to K-12 schools in Utah, but to the state of Utah as well. So one more time, red letter date, December 30th, 2020. It is not the 31st. I've heard people say that. It is the 30th. That makes a difference. If your documentation says a different date beyond the 30th, such as the 31st, it is not eligible. So please note this, write it in your calendar, highlight it, whatever you need to do, set an alarm so that it stands out. In terms of reimbursement requirements, because we've been getting a lot of these questions at the agency, it's really important to note that although USBE will accept a general ledger, it's important that there's details to support that ledger. So for example, in a general ledger, it can't just be journal entries. It really needs to document if it's a service, who is being paid for that service, providing the time and effort documents that back it up in regards to specific funding streams and allowances. So for example, if you're using some of the funds to be able to pay your teachers for creating online learning modules outside of their contracted time, this is part of the documentation that needs to be on file in regards to requesting reimbursement for those expenses related to these funds. Secondly, we do need document-specific items for purchase. So non-example is we spent $500 at Amazon, but instead we really need to see we purchased 22 liters of hand sanitizer, 20 HVAC filters, etc. That level of detail is required in order for the reimbursement to not be turned back. The LEA also needs to have receipts on file for auditing and monitoring as requested. Specifically, we're calling out the time and effort for personnel that are being funded in alignment with the project. We know that this money is going to be audited starting in the new calendar year, 2021. It has already been called out by State Auditor Dougal as an area of interest for him. So in asking you to have these documents, which I know is a large amount of paperwork in terms of getting it in line, we are then setting ourselves, yourself included, up for success when it comes to the audit that we know is pending. So as far as next steps go, you will continue to receive outreach from myself, from Sarah Harward, from members of our finance and our grants management team in terms of reminding you of this impending to December 30th, 2020 date related to all the coronavirus relief funding opportunities. We are also partnering with our regional service centers, our School Superintendents Association, and both charter school associations on outreach as well. So you're probably going to be hearing about it from different partners, and we're really doing that to try and make sure that there's transparency so that nobody misses a deadline and then feels caught in regards to what their intent was to use for the funds versus what they were able to document and submit. We are gathering state and federal reporting data, which I'll touch on here in just a moment. And then last but not least, as an office, we are identifying what sustained needs K-12 education will have that need to be considered by the state legislature as we move forward with fiscal planning for the 21-22 school year. All right, so I briefly touched on reporting and I'm going to do it in a very quick fashion here. So many of you may or may not have seen an announcement that went out today from Superintendent Sid Dixon related to the release of the CARES Act funding Qualtrics survey or tool, reporting tool that has been released from our agency. So just to give you an update on what that looks like, every LEA that received funding through ESSER and or GEAR is required to respond to this particular survey or reporting tool. The breakdown of the tool is in 3 separate sections. The first one is going to be specific to federal reporting requirements that are related to ESSER and to GEAR. That's 32 questions. That question is copy and pasted directly from the federal report. So there's not a lot of flexibility in it. And it's mainly based on financial and implementation data that the U.S. Department of Education is requiring of all states and subawardees related to the fund. The second item that's included in the survey is the Utah legislative request for reporting for CARES. So we proactively reached out to our state legislative leaders in September of 2020 and said, we're already collecting this information for the federal government. Is there additional information that you're going to need so that we didn't have to do this in multiple surveys and in a traditional asking for a last minute feedback right before session? They provided us 8 additional questions that legislative leaders are interested in. And so we've included that in the survey as well. Last but not least, at the last Thursday board meeting, the Utah State Board of Education included some additional inquiries that are more so related to implementation, questions about trends in teacher retirement and retention, seeking information about percentage of days that students are spending online as opposed to in person, and just overall information in that regard. So from a logistics standpoint, we are utilizing the Qualtrics platform to streamline agency, federal, and state reporting. So this has been sent out to the Title I directors, to our LEA heads, and will be coming shortly to our business administrators, as well as our grant points of contact for ESSER and for GEAR. The email states, but I will state here as well, we highly encourage you to coordinate this effort with other leaders within your organization, because each LEA only needs to submit 1 response. And we don't want to be duplicating efforts across multiple personnel, but there's going to be factors and questions that are going to be best answered by a title director, by a business administrator, by the grant point of contact, maybe by the executive director or principal related to those efforts. It is due to USBE by January 8th of 2021. So we're releasing it now so that LEAs have time to look at it and make a plan before the winter break, so that when they return from winter break, they have the opportunity to know what data they need to gather, where that's going to be, and submit to USBE by the due date stated. All right, so that was a lot. CARES is a lot. I appreciate that there are a lot of different funding streams to consider, and that as you move forward, you may have questions about what's allowed for one stream versus another, and if there's clarification on due dates and requirements. I've included my contact information here. You are always welcome to reach out to me, and even if I'm not your right point of contact, as we have other experts who are leading out on ESSER and some of these other efforts, I am more than happy to get you to that person so that we can get these answered in a timely fashion. I know that the deadline is rapidly approaching, and so we're really trying our best to be as quick in response as possible to any of our LEA questions. So with that, I will turn it back over to Patrick. Are there questions, or did I just blow everyone's mind?
Hey, Sarah, both. You blew everyone's minds, and it looks like there might be a few questions, but let me scroll back here. I think you did address a question related to the December 30th for the CRF. So you reviewed that. Question related to the January 8th timeline. I responded to that in the chat. That was confirmed by Finance Director Deborah Jacobson with State Finance. So When it comes to that January 8th timeline, normally we might be able to give more time, but with the coronavirus relief funds, those actually were appropriated to state finance. So we need to give them enough time as well to be able to draw down those funds and work through the reimbursements. That's why we had to move that up a bit. Deborah can correct me if I'm wrong, or maybe Sarah. Let's see if I'm getting everything else. Sarah, hold on a sec. There was a question, who is this survey sent to? I haven't seen it, and I don't think our director has seen it either. So I'm probably a little late on that question. That's probably further back in your presentation.
Yeah, so no worries. So that survey was just released today, probably around 10 a.m. So let me do this. What I'm going to do is I dropped my slides into the chat, but I am also going to go ahead and share, just one moment, a link to the reporting tool. The reason this link is valuable is not because it's a good idea to have to click all the way through it, because there's certain required questions, but because we have linked the whole tool as a file onto the introduction page. So if you go to just this, the introduction to the survey, you can download a copy of the full Word document tool to help you with your planning.
Great, thank you, Sarah. Let's see. Okay, so this one is a little bit different. I might want to pull Brett or Danny in here. And if we can't respond now, we can come back to it. But I have a question concerning the general ledger requirement. My school uses an EMO, so the school's books are maintained almost exclusively through journal entries. So CRF expense reimbursement requests would be rejected because the items are recorded through journal entry.
So
go for it.
Yeah, so let me, a point of clarification there. So it's not really that it's a journal entry, it's the level of detail included in that journal entry, if that helps. And so, like I said, to say it was an Amazon purchase of $500, that level of detail, unfortunately, doesn't meet the fiscal monitoring requirements that we have in regards to approving those elements. However, if the journal entry stated like 50 gallons of hand sanitizer, that would meet our requirement in terms of aligning it with the use case. So it really comes down to the nature of the detail that's included in those individual entries in terms of whether or not it can be approved.
That's great. Thank you, Sarah.
Do you want me to address the hotspots one?
Sure. Yeah, that would be great.
Yeah. So we're getting a lot of questions about the prepayment for broadband and hotspots. And the answer is yes. So you have to prepay for those before December 30th. In regards to the extended services, different providers had different dates that were available. Some of our providers had a 12-month service contract. Some of them were able to flex and do a 9 to 10 month related to the school year. For us, it's not about that end date. It's about that you've made that payment for a set period of service that is agreed upon and clearly documented within the invoice in order for us to be able to reimburse.
It's great. Thank you, Sarah. I believe that's all the questions in the chat. So yeah, excellent information as always. And if you guys do have more questions, you obviously can get in touch with us. We can help you through that, especially as the CRF business is coming due, obviously in the next couple of weeks. That's going to come around really, really quickly over the next month. So yeah, if you have questions, get in touch, let us know, and we'll try to get back to you as quickly as we can, because we know you got to get those done and taken care of. Thank you, Sarah.
Thank you.
Great presentation. Really appreciate it. We'll not stop. Let's keep going with our final presentation by Brett Baltazar, Danny Davis, and their teams. So it'll be the school finance updates with some key items and issues. I believe a little bit of that was shared this morning, but there's some more that'll be added on to that. So Brett or Danny, I'm not sure. Okay, it looks like Brett, you'll be presenting on this one.
Yeah, Well, I'm going to start and Danny's going to finish it off.
Okay, excellent, excellent. Tag team. All right, so we'll turn the time over to both of you.
All right. Let's see if I can get my screen sharing here. Okay. Is the document showing school finance training?
Yes, sir. Good to go.
All right. Sweet. I did something right today. So there is quite a few discussions that kind of hit some of my topics here. One of them was indirect costs. Tony did a great job of explaining indirect costs. I'm going to go a little bit further into it, but not too much further because he did an amazing job, and he and I met before, and I knew exactly what he was going to present. I just wanted to reiterate some of those things. First off, USB is the cognizant agent. On behalf of the U.S. Department of Education, we are authorized to calculate an indirect cost. It is a 5-year approval rate typically for us. So we're actually going through a review process right now with the Department of Education. And we use the modified total direct cost method. And I have a link provided there to give you a better definition of, or an explanation of what that actually entails. The process that we have been given in years past is to do a 3-year odd or even year rolling average. As Tony has mentioned that earlier. I'm not going to go into too much detail on that, but that's very important information. And along with that, I do want to mention what I did mention in our training this morning is that if your LEA chooses to not have an indirect cost rate calculated, please send us an email telling us that you don't want a rate. The feds are very proactive. They want us to be proactive, and they want you to be proactive in the sense that if you want a rate, you have to tell us you want a rate. In that sense, if you do want a rate, we'll know by you filling out the data in UPEFS in our indirect cost tool. If you choose not to have a rate, please email us and let us know that so that we have both sides of the equation covered by the federal requirements. Tony did mention this earlier. There is a new process. It was, I shouldn't say new, it's been a process. USBE stopped for a few years. And after meeting with the feds recently, we are implementing a change that I believe should be able to help you guys in what indirect cost rate you utilize at your LEAs. Right now, an LEA may use the negotiated rate. First of all, they have to notify us that they want a rate, and we go through the calculation process. And that's the first step, is you taking that step and letting us know that you want a rate. Or you may choose to utilize a lower rate than what was negotiated. An LEA may not use a higher rate than the negotiation rate, but they can use something lower. For example, if we provided a restricted rate of 10%, you cannot choose 12% as the rate you use for your programs. It would have to be that 10% or something lower. For example, if you choose to use an 8% rate, you can do that. My suggestion is, from what I understood from the federal government, is that you don't need to notify us that you're using a lower rate, but that it be communicated with your LEA, and I would assume with your board, that rate that you choose to use the lower rate rather than our negotiated rate. And that goes for all programs in that indirect cost rate type. For example, if we give you a restricted rate, you choose to use that 8% rate instead, you have to apply it for all programs that use the restricted rate. You can't pick and choose which program you, on what rate you charge that program. The negotiated rate calculated from UPES will always be the rate used in the calculation process. We will not use the rate that you used, the lower rate that you may have used, that you may have chosen to use. We will not use that rate in our calculation process. We'll always use the rate that our system calculates. So be aware of that. If you do choose to use a lower rate, it may or may impact the way the calculation works, because you're putting more into the program, but our rate is holding it at a higher level. Okay. Really quick, before I move on to the ESSER and GEAR program funds, I did want to mention that if you choose to not have a rate, or if you do want a rate, we need to be notified by December 15th. If you want a rate, go ahead and start filling it out in UPEFs. And if you have questions on how to use the indirect cost tool, please reach out to us. We're more than willing to walk you through each step of the way. And I have some documentations that I could share with you on a more of a step-by-step process. So please feel free to reach out to us if you have any questions about that. Moving on to the ESSER, GEAR, and the Corona Relief Funds. First, just as Sarah had mentioned, there are those three different pots, I should say. The first one is the ESSER Cares, and we have that set up under the 7210 program code. And you can see there that I have both the ESSER funds and the 10% ESSER funds all under that same program code. They're tracking it separately in our system in FiNet. They're tracking that separately, but you do not have to track it separately at your level. And then program 7220 is the GEARS money. And that's, at this point in time, that's the only one that we received from the government, or from the governor's office, that falls into that category. Then there's 7280. On the chart of accounts, I currently have it labeled as Other Cares, USBE. And I did that just shortly before I went on my leave, first part of October. It was kind of a last minute thing and I labeled it wrong. It should actually be labeled Corona Relief Funding. I'll get that corrected on our chart of accounts. So when you look at the chart of accounts now under the program 7280, it currently says Other Cares USBE, but it will be changed to Corona Relief Funding to match those other pots that Sarah had mentioned of CARES funding. And others may be added. It's always changing. There's always new money coming out. So know that there may be some of the programs that are new that will continue to use some of these codes that we have currently created. We do have program 7290. That is CARES money that actually is passed through other municipalities, but is still considered federal money. For example, there's counties out there that recently received CARES money. They may be passing that on to your LEA. And if it does not come through USBE, please use that program code 7290, which is labeled Other CARES non-USBE.
Hey, Brett.
Yeah.
There was a quick question. Any recommendation on how to record program and revenue code, the IRS credit for FFCRA Corona sick leave credit?
That one I have not heard of. Is it part of that payroll protection program?
Let's see. Not sure on that, but we could do some research on that to find out and then come back to you, Gary.
Yeah, I haven't heard of that program. The only other one that I know relates specifically to charter schools is this payroll protection program, which is considered a loan until the expenditures are approved, then they don't have to pay it back, which I do have here separately under program 7310.
Okay.
So we'll
So
note that one and I'll research that one.
yeah, we'll look into that one. One other question, would we use 7290, 4700 for the CARES Wi-Fi program through UEN?
Yes, if it's not a pass-through USBE, go ahead and use that 7290.
Okay. And I believe that's all for now.
Okay. So there's not any other questions about the CARES funding? There is a few state programs that are new for FY21, and there's 5695, which is early interventions, but it was a program that was reappropriated, and it's state corona relief money. I didn't quite know how to label that because there's others that may be coming just directly from the state, but it was to provide relief. And then there's a few other programs, 5911, which is English language learner software. And at this time, that's the only one that's under that program. That's a new program that they wanted to track separately than your other ELL monies. In Utah grants, we did talk with them, and it was an accident that they left off the ability to have you record it under Object 600. 600 and 700 is typically where we'd find your software, depending on what your threshold is for capitalization. So we'll let you determine how it gets reported into Utah grants. I think 700 is probably the only thing available in Utah grants, but when you do submit it to UPEFs, please use the correct coding, either 670 if it's under your threshold, or 734 if it's above your capitalization threshold. Any questions?
Let's see. Let me just double check real quick. So you want us to lump together both K through 12 PPE and coronavirus relief in the same program?
Yeah, K through 12, I went back to this slide, program 7280, which is Corona relief funding, does entail the broadband hotspot, the personal protective equipment, coronavirus relief grant, Wi-Fi access in San Juan, and the new high school testing grant. There may be others added under Corona relief funding. I'm not aware of any at this time. That high school one went out last week or the week before. And so this list may grow, but if they do have it separated into these three pots, the ESSER CARES, the CARES, and the Corona relief funding.
Okay, the other question, let's see, and we may need to do some follow-up on this from Justin Riggs. We need better training on and clarification on FFCRA, Families First Coronavirus Response Act. I was told that it was recommended we adhere to the FFCRA, but that we couldn't request reimbursement. I was still tracking down more information on this, but it came up here, so hoping for more clarification. Brett, I don't know if you can respond to that now, or we can do some follow-up on it via email.
Let's do some follow-up. Sarah has kind of been my contact for a lot of these new programs that have been coming out.
Yeah.
And so I would probably get with her and we'd be able to provide a better response from there.
Okay, Justin, we will provide a response not only to you, but everyone that's here so that everybody has that information. We're clear on that. So one other question, and you want us to report both English language learner software under the same program as well?
You have an English language learner program, and that's not the same as 5911. 5911 is the software only.
Okay, so mentioning that there were 2 grants for the software, I was thinking there was there might be, but I need to. I think we'll need to double check unless you're more clear on that, Brett.
Yeah, I could clarify on that a little bit. There actually is one other English language software incentive that also belongs in the 5911. So,
okay.
But yeah, but the software ones belong in 5911, like Brett said.
Okay, thanks for that clarification. A lot of this may have happened while I was out on leave, so I apologize for that.
Don't apologize for being out on leave, taking care of the new baby. We're happy for you, Brett. So that's why we're a team. I think that's all the questions for now. We are getting close to our 4:30 end time. If you're able to wrap it up by 4:35, we'll shoot for that. I know some of you have to leave. We understand. We will try and ask Danny to go ahead and wrap things up, but we want to get you the information as well.
I'll turn it over to Danny. He has these last few bits that he'll discuss, and I think he should be able to get it done.
Yeah, just a few slides here. So thanks, Brett. I wanted to thank all of you for being here today. I know it's been a long day, especially for those that have been here since this morning. So I want to thank you and thank you for all that you do for your schools and for the children that you serve. So I really, really appreciate that. And all of us at USB really appreciate that. I just have a few slides here. I just wanted to touch on the new fee and fee waiver reporting requirements. And just to let you know, this requirement is just about your accounting system and how it's going to be reflected in UPEFs, what I'm going to be talking about here. The requirement to track your fees is still a requirement under R277 407. But I'm just going to talk about the actual, how it affects the UPEFs upload. So I have a statute, the code there that talks about it being required for FY22. We do have the chart of accounts ready to accept those for FY21. Brett, if you can go ahead and go to the next slide. I think you're, okay, yep. I just pulled a little what it would look like from your AFR. And if you look at the picture there, I listed all the different codes for these fees and the waivers. We refer to the fee waivers as contra revenues here. And then I have a little description of how to look, how we want it to look when it's uploaded in UPEFs. So for the fees, which are revenue codes 1741, 1743, 1745, and 1747, you'll see that those are positive amounts, and you'll see that the fee waivers are negative amounts. So the fees should, like it says here, should represent amounts that are measurable and available, and that'll generally be the fees that are assessed during the year. As far as the waivers, those, as you would imagine, are the amounts that have been waived during the year. And then Brett can go ahead to the next slide. And I just wanted to give you a little example of how that would look on a UPEF's upload. The fields that are required, the fund, program year, program. In this little example, I just chose Fund 10 and Program 5 just for simplicity of demonstrating this. The revenue codes and the amounts there. And I'm just highlighting here that the UPEF's upload should demonstrate that the sign is opposite of the fees. So the contra revenues or the fee waiver sign should be opposite of the fees. So on that first line, you'll see it's 100. The second line, -10. Just so you know how that'll look when it's uploaded. And this is just a real simple example when there's no accounts receivable left over and when all the fees are collected or waived during the year. Obviously, it will get much more complicated the more details and circumstances and scenarios you have. So I just wanted to give you a little preview of what it would look like there to get you thinking about that. That's what I have for the contra revenues. We did get some other questions about the PPP. So I have one last slide here about the Paycheck Protection Program and how to do the accounting for that. And I just wanted to remind you that FY21 will be the first year that all charters need to be following GASB standards. As part of the GASB standards, your audited financial statements will have both fund financial statements and government-wide financial statements. I have a link at the bottom of the slide that if you would like to learn more about the GASB accounting, the Utah State Charter School Board actually put on a really good training that goes over the basics of governmental accounting. So with the Paycheck Protection Program, I also have a link there to some more details about what the money should be used for and how to get the loan forgiveness and some of that. But I wanted to let you know how you should account for that in UPEFs. So UPEFs generally reflects just the governmental funds. And what we told everyone is to initially record the loan to Revenue Code 5400. Revenue Code 5400 is an other financing source loan proceeds. And then that loan will be hopefully will be forgiven at some point if all the requirements are met. And when that happens, there won't be any other entry required for the governmental fund financial statements. And this is just because we follow a modified accrual flow of current financial resources for the governmental fund financial statements. And then for the government-wide financial statements, so this is the part that's in your audited financial statements, not in UPEFs, you will record it as a loan payable, and then when it's forgiven, you'll reclassify to revenue. That's all I had for today's presentation. Let me know if there's any questions, and there's my contact information. So thank you again, everyone.
Danny and Brett, we appreciate that. I don't see any other questions in the chat. That being the case, we will wrap up our meeting. We're pretty close on time, just 3 minutes over. I do want to thank all of our presenters, as well as Jerry Record and Pat Gardner, who helped us with most of the technical aspects and putting together our agenda. Pat is a bit of an unsung hero, so we just want to thank her for all that she's done as well. We also want to thank all of you for attending, being with us today. We know it's a lot of time out of your schedules. We really do appreciate it. We hope that you find some good value in this training. The question has come up as to whether or not we might be able to provide this training down the road and offer CPE credit. I can't answer that yet. That's a question that that we'll have to look into. We will research that and see what the possibilities are. But I did want to make you aware of that as a potential option down the road if it's something that would be board approved and viable for us to do. Other than that, we thank you again for being with us, and we'll, I'm sure, be in touch as we get the allotments out to you with the mid-year update and as we move into the legislative session. So thank you all again, and have a great rest of your week and wonderful holidays if we don't talk to you before then.